guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure. Hi everyone, welcome. Thanks everyone for joining. Just let me know if you guys can hear me okay. I'm using a headset today. Just let me know if you guys can hear. Okay, awesome guys. So we're gonna get started in just a couple minutes. Today I want to start, it's gonna be an intro to our first class. We're going to start learning a lot of learning, guys. We're going to start, a lot of traders need to learn how to trade. So it's going to be our job during these Tokyo sessions to go back and teach a lot, okay? And we're going to start from the beginning, but we'll see how it goes the first week. You guys let me know if you guys are learning anything. Tomorrow will be more of a structured class where we'll get it started with like an outline, like a blog of what we can talk about. Today I just want to go over a few things with you guys. Make sure we're all on the same page and we know what we're doing in these markets. Okay, so just give me a moment and then we're going to get started.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. Thanks guys for joining. It is Monday, January 12th, and it's 6:30 p.m. Eastern. So this is our Tokyo session at this time. I know it's probably late for some of you guys, but over here we got to get these sessions done. I want to take advantage of these Tokyo sessions. For this week, so Monday, Tuesday, Wednesday, Thursday, we're going to go back to learning, okay? Yes, I know the markets are moving. Yes, there's going to be candles opening and closing, and there could be possible trade setups and everything. So if you guys are trading while I'm doing this, just use proper risk management. But if you guys really focus in on these calls. I guarantee you're going to learn something because Dave and I are going to make it our mission in 2026 this year to really teach you guys the art of trading step by step so that you guys can learn how to do this, because we're still getting messages from some of you guys still struggling, not getting it, not understanding it. So it's nice to trade in a live environment and have fun and hopefully look for some trades, but ultimately our goal is here. We're not here for just live trading. We're here for live education, and that's what we started here from day one, and that's what we want to continue doing. Some of you guys, if you guys already know everything, that's all good. You can go on with your trading and things like that. But we're gonna make it our mission this year to continue to learn how to trade. Because you can continue to refine your skills in trading. It just doesn't, just because you've been in the markets for a couple years, you can still continue to learn. And we're going to try and get those little intricacies that maybe you can take you from a beginner to more of an intermediate and get you at an advanced level in trading. Okay, so that's going to be my goal. We're going to start this series in Tokyo's, because when we go back to New York's is just strictly live trading and learning what we do here in Tokyo, and then we bring it into the New York markets. Okay, so we're going to make a little series of this, and this is our first class, and then we're going to go more into private classes with these. So like just for the first couple weeks or maybe even the first month are all just going to be live for everybody to see kind of how we do our thing around here. If you guys do like this type of education, then we're going to go a little bit more private in the Zoom, because I want to hear from you guys. I don't want to be the one talking anymore. I want you guys to say, "Hey, Ron, I got a question." I'm going to unmute. That's why I got my headset on, because now I can listen to you guys. So if you guys are basically can direct me with what you guys need to learn. Let me just do a first intro classes to make sure we're all okay, and then I'm going to take it with you guys. So if you guys literally can lead these classes with what you guys are struggling with, and then I'm going to have like a conversation, like a one-on-one with someone in the Zoom, and I hope that they're not shy, because I'm going to start to select someone to come out of the group and start to have a one-on-one conversation with me, with everyone listening in. Okay, so I guarantee you it's going to help everyone learn. And I'm not here to beg you guys. If you guys want to learn how to trade, you guys are welcome to join. But I'm not a person that likes to beg. I've never begged for anything in my life, and I'm not going to beg for likes or subscribes and things like that. If you guys are getting value out of what we do, then just show some respect and hit the like button and subscribe, because I guarantee you, if you hit that subscribe, you are investing in yourself. You're not investing in SST. You will be investing in yourself, and if you want to continue to learn the art of trading, we're here to support you. Okay. So with that being said, we're going to be here for 2 hours. I'm going to wrap it up at 8:30 exactly, because I want to watch the NFL football game that starts tonight between the Houston and Pittsburgh Steelers, if you guys are watching that. But okay, so first things first. Uh, Again, you have to have some sort of daily routine. I'm not going to talk too much about the daily routine, because we'll have a specific sessions for that. But when you start trading, some traders, believe it or not, just go right into the markets and start trading the next candle. Like they can see right here, and they're trading right off of the next blue candle, and they're trading. Okay, you can trade like that. I used to trade like that. Most traders trade like that. However, it's best to know, if is there going to be any news in your upcoming session? Is there anything going on this week? Is there anything happening around the world that could affect the security you're trading? So these are things that you need to learn as you get more and more advanced. We'll talk about more of that. But first things first, okay? So if we were trading this session or this week, I'm not going to go through the entire folders for you guys. I assume that you guys do this on the weekend, so I'm not gonna do this on today's call. But today is Monday. So if I was trading 650, that's in about 15 minutes. There's some news coming out of Japan. Bank lending year over year, and a current account coming out. Also, at 7:01 p.m. during this session, there's some news coming out that's regarding the pound. So this is some UK news. I won't be trading the pound, and I'm not trading the yen, so I'm not too concerned about these folders. However, if I was trading the yen or the pound at this time, I would be looking into what these folders are. These folders start off with yellow, so I know that they're low impact. However, we have medium impact, and you guys are more familiar with the red folders, high impact. So when they're red folders, high impact, those are they have volatility. Okay, so as soon as I see a red folder, regardless whatever I'm trading, I see a red folder. Okay, so first thing that comes into my head is that's a high impact folder. It's going to cause volatility. If I'm trading at that time and or trading that specific currency or something related to that, and I don't understand risk management, I'm setting myself up to lose a lot of money. I'm setting myself up for a big mistake that it can literally blow up my account if I don't know what I'm doing. And we're starting to see that a lot these days with traders coming into the markets with the belief that they're gonna make a lot of money, and they come in with absolutely no analysis, no education, not understanding the importance of folders and the impacts of them. Okay, so if that's you, no problem. I was you too. I didn't understand folders myself. I didn't understand the high impact from low impact. I had no idea what I was doing. But over time, when I lost a lot of money, I said to myself, it's time to start learning what I'm doing. Okay, so we will talk about that as we go on with these classes. But today, there's nothing going on high impact. Okay, so it's not. If I was trading gold, for example, I'm not too concerned about this. Okay, next thing is earnings. Okay, we're gonna bump into earnings tomorrow morning. Is a lot of high impact earnings. Okay, why? Because we have J.P. Morgan Chase. This week is financials in the earnings for America. Okay, you guys know that we go through these cycles every 3 months. These big companies release their earnings every quarter, every 3 months. Um, so it's very important to know who is reporting and where these are consisted of. What index are they part of? So we have tech earnings, we have financial earnings, you have all types of earnings. These names coming out, so they will affect specific indices. It will affect S&P 500, will it affect Nasdaq, Dow Jones, Russell, all of these. So J.P. Morgan Chase and Company will be reporting tomorrow morning at 6:30. They already are releasing the estimates of the earnings per share of $5 and a penny, and also their quarterly revenue of 45.65 billion. So we will see tomorrow after the report how JP Morgan Chase is doing, and they do represent the American financial system. And we'll see after the last 3 months of what they're reporting. We also have Delta Airlines, Bank of New York Mellon Corporation will be tomorrow in the pre-market. After hours, there's a few other companies. Then as you go through this, I'm not going to go through the entire week, you can see that Wednesday morning more American financials are reporting. You got Wells Fargo, you have Citigroup, Bank of America. So they will be reporting throughout the week. You can go through the entire week yourself and see which days are more high impact. There's pre-market and there's after hours reports. Okay, and then if you just want to see overall global news, Donald Trump is in the news every single day. Did you guys see the news with him and Powell right now? That's ongoing. So, yep, there's big news going on with Mr. Powell and Donald Trump right now, and it's a whole shit show with what's going on. So, us as traders, you have to be on top of the news. Like, there's some traders that say, I don't really trade news, I don't care about news. It doesn't matter. This will impact you at some point in time. Like if Powell gets taken out, like gets replaced and things like that, that affects the Fed, that affects the interest rates, that affects everything that you're trading. Okay, so at the end of the day, this is going to come back and affect you, whether you look into it today or next week or next month. It will affect you. It's always good to know, stay up to date with news. Okay, it's literally part of your job as a trader to keep up with the daily news, because these news are catalysts that move the securities in a bullish move or in a bearish move. Okay, so you got to keep up with news. We'll do more about news at a later time. Okay, so there's lots going on. Okay, you guys know there's a lot going on around the world. In Venezuela, there's stuff going on. In America, there's stuff going on. In Canada, there's stuff going on. In Middle East, there's stuff going on. In Europe, there's stuff going on. There's news everywhere affecting the financial markets globally, all over the planet. Okay, um, so some of you guys are trading gold. Did gold break new all-time highs as soon as they opened up over the weekend? Probably, because there was a lot of news coming out of what's going on in Iran. So right here, like Trump says Iran wants to negotiate as the death toll in protests rises at least to 600 right now. These are all reports. Whether this news is true or not or whatever, it is there for you to read, okay? And guys, there's a free Telegram channel pinned at the top of YouTube, guys. If you guys want to join us, all the links will be available on there. Everything that we do here at SST is available. Dave is trading the New York markets with the snipers in the mornings, the trade signals that we sent out, the ideas, the free blogs available for all of you guys. This is your free Telegram channel. If you guys want to sign up, you're more than welcome. If you don't, it doesn't hurt our feelings, okay? I'm just putting it out there if you guys want it. Also, our website, guys, is available here. All of our free blogs are here, more blogs, and you can get everything. There's outlooks, all type of blogs regarding tomorrow. There's going to be a blog getting started for us on our mission to continue to learn, and that's kind of the blueprint we'll follow on tomorrow's session. Okay, guys? And finally, if you guys do get some value, if you guys want to invest in yourself and learn, please hit the like button, subscribe to the channel, and hopefully you join us on a daily basis here. Okay, so I'm going to get right into it. Welcome everyone on Zoom. Thanks, guys, because I don't want to keep up your time. I really want to make this 2 hours very impactful. Okay, and I know it's late for everybody, but I know you can get something positive out of this. And I might be going over something that you already know. And just remember, this is just the first class, okay? So I know if I start talking about a candlestick, some of you guys are going to be like, oh, again, he's talking about candlesticks. Oh my God. But I can get more and more and more intricate and advanced with a candlestick, okay? But I know a lot of traders still are not understanding the basics. And you got to learn the language as well as we're talking here. If I say an ignited bar, I assume that you guys know what I mean by that. You know, like I have to also in the back of my mind know that when I'm saying an ignited bar, maybe 80% of you guys have no idea what I'm talking about. So it's like us having a conversation and I'm using words that you don't understand. How am I supposed to how are you supposed to learn if you don't understand the language? Okay, so I really want to go over the language of trading. Okay, it's a universal language. You know, if I was speaking in French and you don't know French, it's going to be hard to understand. I don't speak French, but maybe if English is your second language as well and you don't understand English, it's going to make it hard for us to, you know, have a conversation. If I don't understand, your language, maybe we're going to have a difficult conversation. Okay, so but trading is a universal language. Like when we're talking about pips, ticks, points, this is the language that you're going to have to learn. So if you're trading in the futures market, the language is ticks and points. If you're trading in Forex, you need to learn what a pip is, what it represents. You need to learn what are lot sizes. You need to learn this, okay? These are the basics, and it will allow you to understand what we're talking about. When I say a candle is a 5-minute candle is 30 pips, right away you should know exactly what I'm talking about, okay? Because that will help you with your education, okay? So that's what we're going to get into. We want to make sure that you guys understand the language of trading. And then we can take it to the next level with you guys, okay? So welcome, Sergio. Thanks for joining. Armand, welcome. Mirdita, welcome. Thank you for joining. Kyle, welcome, bro. Philip, thank you for joining. Chris, thank you. Husky, welcome. Emrit, I'm doing good. How are you? You're spending all night with your wife renovating your new office. Congratulations, man. Share some pictures with us. We'd love to see the office. And yes, you're using your 2025 profits for that. Amazing. That's what it is. Emrit, you're investing in yourself. You're taking the profits that you made out of trading and you're investing it into yourself by building a new office that maybe you can continue to make more and more and more profits. Okay, guys. Danny, welcome. The one time Habs are playing the Canucks, you want to get Canadians are awesome. Canadians are going to win the Stanley Cup this year. I'm all for it. Within the next couple of years, they got a good young squad and they're building it pretty good. As long as they're beating the Leafs, I'm all good over here. Okay, so welcome, Danny, Kraken, Bruce. Leo, thank you for joining. Yes, the session is recorded and these will be uploaded onto the website for you guys, okay? Because I don't know if they'll stay on YouTube for a long time, okay? But anyways, guys, let's get into it. Welcome, everyone. Same with you guys on YouTube. Thank you guys for joining. Welcome, Extreme. Thank you for joining. Frank, welcome. Thomas, thank you for joining. Dustin, Thank you. Yes, today I'll be your professor. Okay, you. Today I'm your prof. Okay, so remember, now we're going back to class. So if you need to get your pencil and a notebook out, I promise you that you're going to learn something today. Okay, and I have no script that I'm going off of. It's kind of a freestyle education session. This is how I normally do stuff when I'm teaching. But we're going to get more into this where you guys, I'm going to get you guys on Zoom. If you guys have questions pertaining to what we're talking about, I want to make that clear, okay? So if we're talking about like a point of control of a candlestick, okay, and the topic is that's what we're talking about, and you have a question regarding next month's NFP, you can see it's kind of off topic, and it's going to slow down what we're doing. We'll have a session specifically learning about NFP, and I welcome 100 NFP questions. But when we're talking about, if we're talking about a point of control of a candle, I hope all questions are pertaining to the point of control of a candle. That's how we can continue to learn together and we don't get off topic, okay? And I promise you we will learn much more efficiently, much faster for everybody, and we can continue to grow and learn together, guys, okay? And I know some of you guys just want a live trade. I understand that, guys. Believe me, I'm a scalper myself. I'm in the markets every single minute, even when I'm not with you guys. Okay, so I know how it works to trade. But I know the importance of learning. Okay, I didn't just become just a 1 minute scalper, 5 minute scalper just overnight. It took years and years and years and years of studying and learning, and that's what I hope to get out with you guys. Okay, and for those that want to learn, thank you. For those that have already learned and you're on your own, just that's fine, but I want to be here for this traders that want to learn. Okay, that's our mission, what we're here for. Okay, so thanks everyone for joining. I appreciate all of you guys. Dustin, Zetaf, welcome guys. Thank you all for joining. Okay, guys. So first thing is, this is our intro class. Tomorrow we're gonna continue off of today's class, but tomorrow we're gonna have more structure. We'll have a blog, we'll all read, and then some certain topics that we're gonna talk about throughout this week. I'd like to continue with these education sessions on our Tokyo sessions, and then when we go into our New Yorks next week, then we're going straight into trading. So that's how I want to do this. Maybe for first couple weeks, first month of the new year, and I'll take it from there. Okay. Because I'm going to start a live trading academy, and it's going to be limited spots, and from there we're going to start to move into the stock market and options market. But I don't want to be, when we're in the stock and options market, I don't want to be explaining what a bullish candlestick is, because I feel like if you're entering the stock market, you should at least know what a bullish candlestick is. That's why I want to go over all of these things, because when we go into the stock market, it gets a little bit more challenging, it gets a little bit more advanced. Now we're actually like dissecting companies, so we're doing more research. Like, did anyone do any research when Trump went into Venezuela, specifically for oil? Did you guys know that Chevron was located in Venezuela? Chevron is an American company. You could buy calls, you could buy puts, you could possibly, maybe some of you guys have made money already. The first day I heard that news, I was looking at the Chevron option chain to buy some call options. So that's how we got to go into the stock market. There's a lot of developing news on a daily basis, and there's lots of securities and different sectors that represent what is going on around the world. Okay. So first things first is I'm on a chart, guys. Okay. So you guys can see the chart, and there's candlesticks. First thing, guys, is I'm on a 5 minute chart. Okay. I could get rid of this watermark, and you guys would have no idea what this time frame is. You would only know by this clock over here on the side. But I could get rid of that clock as well, and you guys have no idea what time frame this guy's on. Okay. But one thing I want you guys to understand is all candlesticks have the same characteristics. Right there. I just saved you guys years of learning. When you understand that a candlestick has the same characteristics. So this 5 minute bearish candle right here. See this candle right over here, this big black one? That's a bearish candle. We can clearly see that because it is a big bearish candle that opened up here and closed down here. This is on 5 minutes. So I know that in 5 minutes, this candle opened here, it went down here, and it closed right there. But if I told you, if we just switched and we went to a different time frame, and we were on the 4-hour time frame, if I saw the same candle on a 4-hour time frame, I know that that's a bearish 4-hour candle. It didn't close in 5 minutes. It closed in 4 hours. Okay, it closed in 240 minutes where it opened, and in those 4 hours, it was bearish, it was bearish, it was bearish. It made a low and it closed right there. This could also be a daily candle where the entire day was bearish. Okay, I know it's pretty basic, and some of you guys are sleeping on the call and saying, Ron, I already know this. I already got this. Let's come on, let's go, let's trade. But some traders, believe it or not, do not understand that concept. Okay, we've been teaching live now for over almost 6 years now on YouTube. And still to this day, some traders still don't understand that concept. So, do you guys understand that candlesticks have the same characteristics? Okay, like these are things that we got to know, guys. Okay, number one, first thing I'm talking about right now, all candlesticks, whoops, okay, you're going to see Ron's spelling mistakes here. I hate typing, guys. All candlesticks have the same characteristics. You guys are going to judge Ron's spelling. Okay, but that's number one. If you guys don't understand this, then someone please talk to me. Okay, does anyone not understand this concept? If you can, guys on Zoom, this is your opportunity. If you want to talk to me now, if you seriously want to talk to me and you're not shy, you're in front of a group on Zoom and you're in front of live on YouTube. You guys are welcome to unmute your mic and talk with me if you like. If you guys already got this, then let's move on to something else. Okay, so all candlesticks have the same characteristics. I could go to any time frame right now. I can go into the hourly. Okay, so you see now this is a 60-minute candle right there at 3 p.m. today. Okay, at 3 p.m. today on gold, it was a bearish hourly candle. It opened, it made a high, it made a low, and it closed right there. So that is a bearish candle. Same like that one on the 5 minutes, but this one took 60 minutes to create. Okay. Anzar, are we trading today? No, no trading today. Okay. We're going to learn because a lot of traders need to learn before trading. That's what I stated at the beginning of the call. Join us in New York if you're not here to learn. Okay. I want to teach. And I'm not going to beg people anymore. I'm going to go on my own terms. And if people want to learn, they're welcome to learn. If you want to trade, you either join Dave in New York on his sessions, or you can join us in New York. But for this week in Tokyo, we're learning. Okay. Or you can go to another group and trade with them. No sweat off our back here. Okay. Okay. So coming back over here, I'm sure no one said anything about this. All candlesticks have the same characteristics. Now that I know that, okay, so this is now the next piece of the puzzle. If I learn these candlesticks, I can teach myself, do I want to be a scalper? Do I want to be an intraday trader? Do I want to be a swing trader? Or do I want to be an investor? Do you guys understand what I just said there? Because a lot of you guys, you see, are not listening. All you guys are worried, not all of you guys, but some of you guys are just worried about, are we live trading? I'm trying to teach you so you can trade for the rest of your life. If you don't want to, again, I'm not here to beg you guys. I have other things to do with my time right now. Okay? You want to be all three, Justin? Absolutely. I am all three myself. I am a scalper. I'm an intraday trader. I'm a swing trader. I'm an investor. I own businesses. I'm an entrepreneur. All of those things. Why would we not want to be all of those things? Okay? Everyone wants. Hopefully, all of you guys want to do those things in life. Okay? So, but now how you physically trade in the markets is your own personal style. I personally like to scalp the markets. There's reasoning behind that. I'm not going to go into those today because we'll save those for other classes. But when I know that all candlesticks have the same characteristics, I know that if I learn the skill of understanding price action, I could literally slow the markets down, or I can speed up the markets if I want. If I want to speed up the markets, I go down to the hourly, 30-minute, 15-minute, 5-minute, 1-minute. I could literally get in the markets quickly, trade for an hour a day, maybe 90 minutes, hopefully hit a daily goal, and I'm done for the day. That's scalping intraday trading. Some traders don't have the luxury of having an hour, 2 hours, 3 hours to spend in the markets because they have other things that they're doing in life. They're taking care of their family, they're working, they have other things. But you could also learn how to understand price action and then maybe switch over to the 4 hour charts and look for the same type of patterns that we look as intraday traders or scalpers, but you're looking on a higher time frame and you're looking to hold those positions for multiple days. That's what a swing trader is. But you still got to learn what is a bullish and bearish candlestick. You still need to learn if a 4 hour candle has a large upper wick like this, you still have to understand what that's telling you. What is it telling you, right? This could be exactly a 5-minute shooting star candle, and you see the sell-off that continued off of it, but it was created off of this bar. As soon as I see this bar, I know exactly what's going on. You can see in the past, that's the beauty of price action. They're created in the past, they're trading in the present, and we can predict what they can do in the future with high probabilities. They're not guaranteed. But you see right there, that was where there was some resistance on those 5-minute candles. And this one, look at the time. Okay, time and sales. I can't stress that enough about time and sales in the markets. It's an online auction. There's specific times in the markets where you have to understand that there's more volatility. So 6 p.m. 1800 military time, this is when a daily candle opens up on this specific security, gold. And you can see what they literally did. What is above resistance? There's liquidity. You can see it came up bullish, spiked the liquidity, and that was an impulse candle coming up there. But you guys understand that this candle has 5 minutes before it closes, and it got rejected. Why did it get rejected? Because there's offers up here, there's sellers up there. They absorbed all of those buyers, and look at how it flipped and closed right there. That for me is a signal. All I need to know to basically go in on a short position just off of that candle. This candle we call a SST is the FU candle. This is the candle that we coined, the FU candle. What it's doing is basically to all the buyers, it's saying FU. It's coming up there, it's spiking the stop losses, spiking the liquidity. Maybe some excited buyers are getting in on that with the FOMO that it's going to go higher, and then they reverse it down and they close it as a shooting star, and then look at the next bar and the next bar, okay? And as a scalper, that's literally what I'm looking for maybe that move right there, this candle and that candle. I'm not looking for it to go all the way down to the bottom and to crash the markets. I'm looking for just that move, okay? And then there's a certain way how we measure the distance of that move. And you see now it's reversing right back up to, if you are still holding that position, if you sold right there, now if you don't have a break even in the market, it's coming after your stop loss in the market, okay? And then this is where we're going to learn about handling emotions in the market. Fear, greed, hope, and prayer. Those are not any type of trading strategies. If you're scared to trade, why are you scared to trade? You possibly have not learned anything about risk management, or maybe you don't have the education required to be a trader. That's why you're scared. When I trade the markets, I'm not scared. I'm not scared any day. I can go in the markets, I can trade FOMC, NFP, a Wall Street market open, I can trade futures market open, I can trade London market open, I can trade any time of the day, any security, any time frame. Why? Because I have the confidence that I know what I'm doing, right? Because it's the same shit that I'm doing, just on a different security. If you give me any security, any time frame, that's what we're going to do. When we get better at this, we're going to have you guys doing freestyle sessions. You guys are going to, I'm going to ask 3 things from you: a security, a time frame, and any type of strategy you want me to trade, okay? And I will show you how we can do that, okay? To show you how, like, just reading price action applies to anything, okay? And I will literally show you guys that, okay? So first thing is, we got to learn the basics, okay? Because I just talked a lot there, but what are the basics? Okay, so number 1, okay? The color of your candlesticks, okay? First of all, What is a bullish and a bearish candlestick? I know it sounds, holy shit. Some of you guys are saying, oh my God, this guy's talking about a bullish and a bearish candlestick. I'm so far more advanced than that. Why is this guy wasting his time on a bullish and bearish candlestick? Okay, first thing, you got to know the language, right? When a candle goes up, it's considered bullish. The candle or the trend, it's bullish. When the markets are going up, it's considered bullish. If there's a big positive candle, it's considered to be bullish, okay? And in the opposite, if the market is going down, it's considered to be a bearish market. If there's a big black candle, it's considered to be a bearish candle, okay? And the color of the candles do not matter. Doesn't matter. If you have purple candles, pink candles, red candles, black candles, blue candles, green candles, yellow candles. It doesn't matter. Just understand the direction of the move, okay? Because it doesn't matter the colors, okay? Now, let's follow this blue candle, okay? Let's just follow this candle. So, first thing is, all candlesticks have the same characteristics. Can someone tell me one characteristic that they all have? Okay, and I'm not going to wait all day for you guys. I'll probably be typing it while you guys are thinking about it or you guys are saying the answer. Okay, all candlesticks have an opening price, a high, possibly, not always, have a low, and have a close. Not always. Okay, I want to put that in brackets. Not always has a high and a low. That's what's the ignited part, okay? So some candles you notice don't have an upper wick or a lower wick, okay? So don't always assume all candles have to have wicks. Do you guys understand why some candles don't have wicks? Some of you guys just trade and have no idea why a candle doesn't have a wick on the top or below. But all candles have an opening and a closing price, 100%. But the wicks determines where the candle closes or opens, okay? Now, let's just go off of this candle right here, okay? So this is where I'm going to start my analysis, right after this big black candle. Now, what's the opening? How do I determine the opening price of a candle? And another word for saying candle, you guys might catch me saying bar, okay? These are bars as well. These are called candlesticks and bars, okay? So first thing I have to know is, where is the transition from the previous candle, okay? So I know that this black one right here closed right there. So that's the closing price of this candle. A bullish one just opened right here, okay? So this is the opening price, okay? I'm going to make it green. And now we have an opening price. The opening price is right over here, $4,578.90, okay? That's the opening price of this bar at 6:15, okay? These are facts, okay? Do you understand? You guys, we cannot, these are facts, okay? You know when you can't kind of go against facts? We can't make this up, okay? Like that bar opened right there at 6:15 p.m. Eastern, and it opened up at this price, okay? We all got that. Now, when it opened, okay, let me just write here that this was the opening price. Let me just clean this up. Sorry. Opening price at 6:15. If I'm going too fast, you guys let me know, okay? But it shouldn't be that complicated. This candle opening price had an opening price right here of 4,578. Now, when it opened, was the candle bullish or bearish upon opening? What do you guys think? I'd like everyone to get this answer 100%. When this specific candle opened, was it bullish or bearish? It's not a trick question. Bearish. Everybody should be saying bearish on this call. If one person says bullish, you are in fact incorrect, okay? I'm sorry to hurt your feelings if you said bullish, but facts are facts, okay? it opened, and you can see because it created a lower wick, okay? So I know 100% of the time, and I can look at this candle, and this could be a 5-minute candle, this could be a daily candle, and the daily candle opens, and if you ask me, was the daily candle that opened, was it bullish or bearish? I would tell you right away, the daily candle opened and it was bearish. How do I know that? Because I see the opening price, and then it came down, it came down, it came down, and it stopped right there. Okay, so that is the lowest point of this candle. I'm going to place a purple line to represent the lowest point. Okay, right there. That's the lowest point. 4,578.09 was the lowest point of this candle. Okay, so I'm just going to write over here. That's the low of the 5-minute candle. Pretty easy stuff, right? Nothing too complicated. Now, do you see this other low of this candle? What does this big candle tell me? The previous candle prior to this, where it made a low. What was happening over here? This was a big bearish candle, was it not? Holy shit, look at the size of this candle. It opened and it came down, black, black, black. It made a low and it came back and closed. And then you see how we transitioned to the open of our new bar and it came down. What did it just do right now? Okay, so if I go backwards, right there, what did it just create? What did it created something. Yes, it did create the wick. You're 100% correct about that. But what else did it create here? At this point, 4,578. Rejection. A rejection and a higher low. Higher low. This one right here, iPhone. This is a higher low. Okay. Why is it a higher low? Because it's technically higher than this low. So that's a higher low, right? Let me just, I gotta find my, okay. So this created a higher low of support, right? We all know what support is. We all know what, hopefully we know what resistance is. We'll talk all about that. But that created a higher low support. So it's higher than this previous low. That's a higher low. So the buyers came in, and what is that telling me about the depth of market? Now I'm going to ask you a more advanced question. What is that telling me about the depth of market? When I see this wick being created here, creating a higher low, what is it telling me about the depth of market down in here? This is what we call the depth of market. What is it telling me? It should be telling you something. For a trader that understands this, should know behind the scenes what's going on. Lots of buyers. It found some buyers. It found buyers asking to trade at this price, and they're asking to trade above this price. Okay, so it's showing that buyers are interested at buying at this price. They could have put pending orders and got filled down in here, but I guess they're trying to build some type of support, and it's showing that because they did create the higher low. So that is showing some support right there, okay? So now the buyers stepped in and they came back to the opening price. Okay, so you hear when Ron is always saying the opening balance. Okay, so this is where the opening was, the opening balance where the candle transacted. It came down, created a higher low, and continued to come up. Now, let's see. Remember, this was a 5-minute candle. So it got buyers, buyers, buyers. It's coming up bullish, 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 bullish. This was a big blue candle at 6:15 coming all the way up. Big blue candle, big blue candle. And then look, it stopped right there. Okay. So what happened up there? Why did the candle stop right there? I'm going to make it red to show like resistance up here. Okay, so you see it came up there, and what happened? This was a big blue candle, blue, 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 and then it came right there, and what happened? It got rejected. Why? Because there's more offers in the market. There's more sellers at this price than there is buyers. At this price of 4,587.52, there was more sellers than there was buyers up here. So the sellers ended up pushing it down, pushing it down, pushing it back down, and then the bar closed right there. That's where that entire 5 minutes, that shows all of the transactions in that 5-minute time frame. Okay, and when I say all candlesticks have the same characteristics, this could be a 4-hour candle. A 4-hour candle opened, it made a higher low, and it was bullish for 4 hours, coming all the way up there, and then it got rejected, and then it closed there. And that entire distance could be 4 hours. This could be a weekly candle. This could be, but we're looking at a 5-minute candle here. So all of that happened in 5 minutes. Okay. Now it found this resistance right here. Okay. So that created the highest point of the candle. Okay. So I'm just going to write over here that this was the high of the 5-minute candle, right? And then that created, in other words, resistance, okay? So resistance is a word in the markets that we use to illustrate that it's sellers. Sorry, can you guys see this? Let me see if I can push all these maybe to the left. Maybe I'll change the color here, make it red. Okay. So we got the high of the candle, right? Resistance. This was the low of the candle, sorry, and it made support down there. So the opposite of resistance is support. Support is another word for saying buyers. Resistance is just another word of saying sellers, okay? We'll get through all of the words so we're speaking the same language, okay? Remember, there's different words that can, like when you're speaking in English, remember, if I'm saying there's 3 different theirs. There's their, T-H-E-I-R. There's their, T-H-E-R-Y. And then there's their, T-H-E-Y apostrophe R-E. I can imagine for someone that's learning English as a second language, how complicated the English language could be. Because there's 3 different spellings for the word there, and they all mean something different. There could be one meaning possession and things like that. I'm not an English teacher. That's not what I'm here to teach you guys. But also, that's what I mean. Trading can get complicated because there's different words that people use to say the same thing. Like order blocks, zones, offers, sellers, resistance, supply. All of these things are basically just coming down at the end of the day to mean the same thing. But they have taken on over the years different meanings, different names. There could be different type of strategies that utilize, like talking about, like what I'm talking about. If I'm talking about the wick, obviously I'm analyzing the wick. But there's been programs that have started that are called wick analysis or wick analysis strategies, and they charge you a lot of money to learn all about this stuff. But we are basically analyzing the wick. So we're doing nothing different than what wick theory is and things like that. It just took on fancy names over the years, okay? So don't get too preoccupied with what the names are, okay? Just understand. I always said, understand what's going on. As long as you understand that the buyers came up there and then they encountered some sellers and the sellers pushed it down and then the candle closed right there. That's basically all you got to know, okay? And then some traders are just too preoccupied in the names and getting confused with the names, and they're forgetting what the hell the candle is doing, okay? Because sometimes when I go on a one-on-one and I'm talking with them, I'm like, just like, why are you confusing yourself and making this so much more complicated than it has to be? Okay, because they're too preoccupied at run. Is this called resistance? Is this called a supply? Is this called a this that? And I'm like, I'm more confused than them on the call sometimes. And I'm like, why are you doing this to yourself? You don't need to complicate something that's rather simple. Okay, now the candle has not closed. It came up there and it found a high, but the candle is still live. But it came down, it came down, it came down, and that's where it officially closed. Okay, those are facts. That's the opening. We know the opening price, we know the lowest point, we know the highest point, and then we got the closing price. Okay, so that there is the closing price of the candle. For 4583. Okay, so this is the closing price right here. Just going to write closing price. Does anyone have any questions so far? So we just walked through in detail how a candle can open up, how a candle can make a higher low, find some support, come back to the opening balance, have buyers bring it all the way up to this point. Okay, and when it came up there, what is that wick? That wick is a lower high. That wick is a lower high, because if you look at the preceding candle, it's lower than what it was before. So let me just write up here that this is a lower high. Okay, LH. Why is it a lower high? Because this wick is lower than this wick. Okay, so then when the sellers came in, they pushed it down. Now you see the closing price. Now the volume that's left in the candle, what is this called? The volume that's in the candle, this big blue box, what's this called? This has a name. It's got a name. So we have to learn the name of what's a body. Yeah, very simple, Trevor. So this is the body of a candle. Okay, so all candlesticks, when we're talking about characteristics, all candlesticks have a real body. The real body is the opening and the closing price. That's what creates the body of a candle. Very simple. Okay, so that's the body, real body. I'm going to call it the real official name of what it's called. It's called the real body. And this contains the volume. Okay, so another word is volume, right? There's a lot of things going on. There's volume analysis, volume profiles, volume of transactions, delta volume. You see, when we're studying volume, volume can get very advanced. Some of you guys use a volume profile on your charts. Some of you guys use volume bar profile on the bottom of your charts. Some of you guys are watching the depth of market through order flow, and you're looking at the delta of volume. But volume, it's like if we have a cup filled with coffee, right? It's got volume. When we fill up the cup with coffee, it's a full cup of coffee full of volume. When I drink that entire cup of coffee, it's got no more liquid in there, no more coffee in there. There's no more volume left in that cup. So you can see that when it got rejected up here, you can see that they kind of thinned out the volume up there. That's what caused that, the wick. So the wick also is another name for like exhaustion in a candle. The volume came up here and transacted with all of those orders, but there was more offers that pushed it down, and we had a closing price. But it leaves a kind of a footprint behind. It leaves evidence behind. It's telling me where the next resistance is or where the next support is. Okay, and I'm not going to talk about point of controls yet, because we will just want to continue talking about the next bar. Okay, so let's go from the next bar. Now, would you say that this is a bullish or a bearish candle that printed? After it opened, it was initially bearish, made a higher low, came back up all the way up there. The sellers pushed it down. At the close of this candle, would you say that this candle is bullish or bearish, and why? What would you guys say? I know what I would say. It's bullish. Why? Because the way how you tell if it's a bullish candle is look at the opening price and look at the closing price. Is it bigger? Okay, so I know that this candle opened at 4578.90 and it closed at 4583.27. Okay, so I know that that's approximately $5 higher. So it's higher, bigger, bullish buyers. Okay, and then I know by trading this particular security gold, if it makes like a $5 actual move, I know how to calculate that into pips, right? Every dollar in gold is 10 pips. So if it moves $5, I just multiply 5 by 10 and I get 50. So I know that the opening balance and closing balance consisted of 50 pips was the closing volume, right? And it's bullish. Okay, I know it's maybe going against a bearish trend, but that candle is still considered to be bullish. Now, the candle closed. There was the closing. A new bar opens up, and it just continues where this one left off. And you can see there's the closing and the opening price. So you see the closing of this bar is now the opening of this bar, okay? And then look at when it opened, similar, okay? It was bearish when it first opened up. It was black, black, and stopped right there. So it made some support, okay? You see how this bar now came up and it made a higher low, right? If I take this and put it at the wick, it created a higher low. So it's creating support now, building off of this bullish volume, right? So this is not the closing price. This is not the closing price anymore. This is the opening price now. But now it's a 5-minute bar, so it can't in fact be the opening of 6:15. This is the opening bar of 6:20. So 5 minutes later, okay? So you can see how we can also identify the exact date and time of transactions when they occur in the market. So this is the opening price of 6:20. I know it's bullish, okay, because it continued off of here. It was initially bearish where it made the higher low at the wick right there, and it made a low and it's continued to push back up. Now, we've got a wick behind, okay? And then we can also talk about the size of wicks. It might be a like, see, this is a shorter wick. That's a really short wick. That's a rather long wick. This is where you got to analyze wicks now when you're trading, okay? And it's seen as exhaustion. So this came up, was big blue, and then it pushed right back down. So the next candle that opens up, its job is to continue to backfill this wick and create a new high. Okay, do you guys understand that? A job of a candle is to continue what the previous candle left behind. Are we all on the same page on that? Okay, maybe I haven't really talked about this with you guys. This is where I told you you're going to learn something new on every single call. And I'm still talking very basic terms. Like, this is very basic in my opinion. So, but a lot of traders don't know that. The candle's job, the next candle, is to continue to do what the previous candle left off and create more. But sometimes it doesn't happen, right? Sometimes a candle comes up and it's starting and then it gets rejected, and that's what creates a lower high. And you can see how strong the depth of market is above where those sellers initially sold. So this is where you're reading the analysis of what's going on in the market. And if I see that that candle cannot do its job, like, you know how I have a job every day when I wake up in the morning? I have a job to do. You have a job to do when you go to work every morning. You clock in and you clock out. You do your work and you get paid. The candles also have a job to do, but sometimes they fail to do their job. You know, like some candles are their job is to fill that wick, and then they fail, and then they get rejected and they go back down. Then that's a failed opportunity of that bar. It failed its job, okay? So now when you're following the volume, now we see what it does. So it came up. Remember what Ron said. Its job is to backfill this wick and maybe create a new higher high, because then it's advancing this uptrend that was created at 6:15 on this candle right here. So it's to continue this trend going up. Now, it filled. I can see it now because I can see the wick that's left behind, and then I can see the big blue volume, and then I have the red line, which shows me that was the previous resistance of that candle. And then I see this candle not only filled it, look how it backfilled that entire wick, it created a new high, okay? So that's this high of the 5-minute resistance right there, and did it, and then it just got rejected and it closed. So now I can see exactly the opening and the closing price, how high and how low it went, okay? Now this one tells me a different story. This one is telling me that it closed right near the highest point. Okay, remember the previous candle? It closed all the way down here. So this candle was very powerful, full of bullish volume. Opening price was 4583 and the closing price was 4588. So again, another $5 move in gold in the real body, and that's 50 pips. And it closed, I would say, about 97% maybe towards the highest point right up there. So the next candle, how did it open? It opened bullish, right? And it did its job. Remember what its job is to do? Is to fill the previous wick Did it do its job? Yes. Okay, so this candle opened and did its initial job of producing a new high, but did it close above there? Remember, this is a 5-minute candle. That could have happened in the first 30 seconds. And if you get excited and you buy, then this is what happens. You buy, you're in the money for a few seconds, and then it gets rejected. And then now let's see what happens. So it got rejected. Okay, it did make a higher high off of this, and this. But remember what's behind us. We have a big bearish candle behind us. Okay, so this is a counter move coming back up. It's going against the resistance right over here, this big body candle. Okay, and I haven't even talked about trading in the point of control yet, or 50% of the structural candles. I haven't even talked about that. I'm just explaining bar by bar what's going on here. Okay, and I didn't just pick a specific time in the market. I just went off of this bullish candle starting. You guys can tell me anytime, any security. I don't care what it is, and I'll break it down for you guys. But right here, it opened. It was initially bullish. It did its job. However, sellers pushed it back down where? To the opening price. Okay, so now it opened right here and it came back bearish, 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 and it made also a higher low and a close. Okay, so you see now, yes, it did initially break, but you see how it came down, came down, came down, and closed right there. Now, did this bearish candle, did it engulf? Okay, another word is engulfing. Engulfing. Did this black candle engulf the opening price of the previous candle? The answer is no, because it closed right there. So it still left behind a little bit of buyers right there. Okay, that blue body is still in the market, right? Those buyers that bought right here, it came down, but you see, it didn't come all the way down and kind of swallow them and even go lower. It got held right there, created a low, and right there and closed. Now, look at how the next bar, again, opened bullish, came down right into 50% of that volume of what's left over right there, right? Exactly 50%. And it came right back up to the opening price. And when the buyers extended it, initially when it did its job of breaking that high, that candle did its job, but it didn't close above there to confirm the volume followed it and closed. Unfortunately, closed back below there, but the candle still created a high. Okay, in order to keep going higher in the markets, we have to create higher highs and higher lows. That's what sustains a trend going up. As soon as we stop creating higher highs, then sellers could come in the market and start making lower highs, and then we could continue to move back down. But you see how you got to give the candle its time to close, right? That's why sometimes we trade on impulse. We make quick decisions very, very fast, and we don't allow the candles to close. I know it's exciting and you want to get in the market as things are developing, but you'll get so much more information if you wait for a candle to close, because at least then you can verify where it opened. You can verify if it had a low, you can verify if it has a high, and you can verify where it closed. And you can also verify how much volume is inside that candle upon closing, okay? And that's where you're going to have to learn some patience and discipline in trading. Now we can see it came up, Look, it made a new high, and look at where it closed, okay? Now, it closed basically like right at the highest point right there. Like that's now closing 99.9% right at the highest point. So this is where now you have manipulation in the markets. I know this might be a little bit more advanced for a beginning trader, but there is a thing called manipulation in the markets. Now, what is manipulation is like just if I was a betting man, okay, and I have to be a betting man when I'm trading the markets. Hopefully, my bets are on the high probability side when I'm placing my orders. I'm basically placing a bet that the market is going to go up or the market is going to go down. Now, when I see this, where it closes virtually at the highest point, I always ask myself, how did the next bar not open bullish and it's got no wicks behind. The only other thing is it's got to fill back up to that big bearish body that started this entire move coming down, right? There's no way possible how that didn't just open and it just, even one tick, even to go up one tick, 1 point, 1 pip, just to create a new higher high. The market, when they opened this bar, they decided, okay, not you, not me, not your cousin, not your brother, not your sister. When this bar opened up, the market makers, whoever created this type of liquidity that we're trading, decided at this time that it's not going to advance any higher. Okay, you and I, even if we know it's manipulation, we can't do anything about it. We can sit and complain and cry and argue and this and that, but it's not going to get you anywhere in trading. Just understand that market manipulation exists in the markets. That's it. We can go into a rabbit hole and we can discuss all that on a different call, but right now, just you got to acknowledge that that happens in the markets, okay? But what you got to learn from this is learn why it's doing this. There's got to be a reason why the market is not allowing it to go any higher. Does anyone care to guess what the answer is to that question? Now it might get a little bit more advanced from just learning what a bullish or bearish candlestick is now. Now I'm actually talking about market manipulation. And if it's your first week in trading, now you're probably now understanding why markets do this, okay? Because there could be, again, this is not always the exact answer for this, but you see, in order to completely backfill this candle and engulf it, okay, that was a pretty substantial bearish candle, that it came up, but it didn't have maybe enough volume to continue moving up. So the market has pending orders in a market, which are, there's pending orders waiting right here in the market, waiting to get activated. There could be buy orders down there. There could be sell orders, okay? There's orders in the market right here waiting to get activated. There's orders maybe at 50% of this bullish candle waiting to get activated. There could be orders waiting in the market at this location, at this block, waiting to get activated. So the market makers can literally see where these pending orders are, okay? And if they want to come down and pick up these orders, they create a situation like this that doesn't allow it to advance any higher, and then they open the bar bearish ignited, okay? So remember when I told you the characteristics of all candlesticks have an OHLC, an open, high, low, and a close? And then I said not always. Remember I put those brackets around right over here. Where's that thing? Right over here. OHLC, not always. This is a situation, not always. So does this candle, it doesn't have an upper wick, okay? So what that's telling me is as soon as this candle opened, it's bearish ignited, okay? It's coming down with a lot of selling pressure. First thing I look at is when it comes down is where will it pick up support? Okay, because this could be a huge bearish engulfing candle and come and close all the way down here, and then we're starting a next move coming back down. But you see how now it opened, it came down bearish, 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 bearish. Then it stopped right there and picked up all this liquidity behind. There could be pending orders waiting to get activated all down that candle. It activated them. Did it break the structure that was being built right over here? We still have a higher low. It's still technically a higher low. The buyers brought it right back up, and then that's where they closed it. Now, with that pending orders, that volume they picked up, there was the closing price of that candle. There's the opening. When this candle opened up, it was bullish. So it came up with those pending orders that this bearish candle picked up, and it was blue. It was blue, blue, blue. And look, it came right again to that exact resistance and could not break out of there. So technically speaking, it did not have enough bullish volume at that point of time at 640 to continue to trend up. the sellers were offering, and they continue to push the market down. Where the candle closed near the lowest point, and that's a bearish pin bar, almost a shooting star candle, not technically because there's a lower wick. So this technically should have opened black and bearish and continue to break these lows and test down in here. So you see how this opened bullish ignited, right? Do you guys see what I'm saying? When you see like a bullish ignited or a bearish ignited, it's kind of stopping or starting momentum of a move. Okay, so right there, that this candle, if you understand price action and you can read candles, this candle opened and it was bullish, 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 equal highs. I haven't even talked about tweezer top highs or equal highs on this call because that's a little bit more advanced, but you guys are probably starting to understand a little bit that look, this candle did not do its job by creating a new high. Why? Because there's a lot of sell it orders exactly right at this location in the market at this time. Okay, so when you're trading, you're not trading with a hope and prayer. These orders are already situated here. No matter how much you pray to the Forex gods for it to go above, order flow is as at the end of the day answers all the questions. So it came up there and you see again it failed. Sellers really rejected this buying candle and right back to the opening price, pushed it, created a low and closed. Probably like consider where that wick is in the lowest point. That's about again 97% near the low. So I always ask myself, how did this candle off of all of that bearish momentum, off of how they trapped all those buyers in that candle, how did they not open this bearish and just continue to take out that wick and maybe transact back down into this block here? Reason being is because there's a lot of pending orders that were waiting to get filled on that pullback, got filled, and continuing to keep this uptrend alive without breaking it down. I see a higher low, I see a higher low, I see a higher low, and I see an ignited open. Okay, but the things that I don't see are continuing to break out of here. So this is a phase in the market that is consolidating right here. This is where you can determine a range of consolidation because you can see like the bars are of equal size, right? So you see when it came up all the way bullish up there, couldn't break, came all the way bearish right there. See how it kind of held right there at the close, and next bar is bullish ignited. So there's buyers, there's sellers, there's buyers. We're still flagging in this bullish flag pattern, and it's got a high probability of continuing to make high moves. Okay, so if you're continuing to follow the volume, the next candle that opened up, opened bullish, came back down bearish, picked up a higher low. We're still above the point of control of this volume. I haven't talked about that on today's call. Maybe we'll talk a little bit more about that tomorrow. Point of control of volume, and we'll talk about volume tomorrow. It opened, it came down, made a low, and this candle did its job to continue to fill back to the opening balance and break the previous high, which it did. And look, it also came up, and you see that big bearish candle right there, that big black candle that started that big move down at 10 after 6. It took 1, 2, 3, 4, 5, 6, 7, 8 candles. 8 times 5 is 40 minutes. So it took 40 minutes to break that high. So look at how it broke the high. It created a new higher high on this trend that started right here. But overall, this is still technically a lower high from this candle at 6:05. It's still a lower high from this candle at 6 p.m. So selling pressure on a higher time frame is still trending the market down. Okay, this is what we call a counter pullback, a counter trade in the markets. Now we see it broke that high, okay, and then look at the selling pressure. Continue to push it down, push it down, push it down. There's the closing price. Now, just because even if there's a little bit of closing volume, it still technically did close above this resistance point that failed right there, failed right there, failed right there, and failed right there. At least now we've got some volume confirming that it closed above this. So whenever I have a zone, if I have a zone and I have closing volume, what I do with the zone is I just flip the color of the zone to represent the party that won that move. So in this situation, the buyers broke out for that new high. They didn't close near the high, unfortunately. There was sellers, but it still did close with bullish volume. So anytime it comes back, maybe down to this relocation, maybe we'll see if the buyers will wait to buy a possible retest at this location. Okay. Now we can see again, the next candle opened bullish. It was initially bearish. It came down, but look at how small the wick is. It didn't even attempt to come down to retest this location. It didn't even come down to retest this bullish candle. It didn't even come down to retest this. So that technically is a higher low, and it did its job. Remember, its job is to continue to backfill the wick, which it did. It broke and created the high up there. But you see now, when you figure out the resistance up there, sorry for all of these lines. I know they're not making sense, all these lines. I'm just going to get rid of these right now. Just want to show you that was the highest point of that candle right up there. But you still see how there's a big FU candle behind. Okay, so it came up, and now time and sales. Time and sales. This big bullish candle was produced at 6:55. Look at the next bar, guys. 1900 is 7 p.m. Eastern. Okay, now tell me, you guys tell me. I'm not a market maker. Some of you guys think I am. I'm not. I'm just someone who understands price action. Okay, I know that market makers make the price action, so I better learn how the market makers engineer moves, because it can really help me understanding when I'm trading, if I'm in profit, when to not get greedy and learn how to accept profit. Maybe if I'm looking to counter a move, time and sales, understanding everything that's going on in the markets. I study each candle, every single candle. I do not take my eyes off of any candle. Okay, that's when I'm scalping the markets and I'm physically at the computer and I'm looking. I watch every single candle open, how high it went, how low it went, where it closed relative to other structure in the markets. And I do this on a 1 minute basis every 60 seconds. So you got to be really fast. This is pretty slow for me, 5 minutes. Like, it's a 300 seconds as opposed to 60 seconds. But when we're learning, we can speed up our education. Next time we can jump on the 1 minutes and I can really teach you. But if you don't want to trade it, that's fine. But take from what I'm teaching, and then you apply the same thing to maybe you want to trade 30-minute candles. But you'll still see remember what I told you from the start of the call. The most important thing of today's call was all candlesticks have the same characteristics. So if this was like a 30-minute trend coming up, you still got to understand that there's still a big FU 30-minute candle behind. It's still coming from a higher time frame selling, and you have to understand these things. Okay. Now, see how that candle opened up? Did it do its job? This is a new hourly candle that opened up at 7 p.m. Sometimes, guys, when I'm trading live with you guys, I'm in a buy, I'm in the profit, and then I'm going into a new hour. Sometimes I even say, guys, oh my God, I'm making a big mistake by still holding this trade. I bet you this trade is going to come back and either hit my break even or, it's going to, and it happens. Guys, I can say that it's not just by chance that this happens. You will start to see, it's called an hourly switch up in the markets. Hourly candles, 60-minute candles. Why do they do this? Because some hours open up and there's certain markets opening up, there's certain exchanges opening up. Another hour will be going into futures market open up. There could be volatility there. There could be bigger orders waiting to direct the market in a certain direction. But just understanding this, sometimes when you want to continue to take a trade, like maybe take a buy, you see how they can suck you in? See, like the buy move already started at 6:15 and it was trading for 45 minutes in this uptrend and it made that high. A big clue is number one, did the candle do its job? Remember, a candle has a job to do. And you can see that it failed to do its job. This candle opened, it was bullish. It was blue for a few seconds. Did it do its job by breaking this high and doing its job? Remember, I tell you guys have a job to do every single day when you go to work. You clock in, you have a job to do, and then you clock out and your job is done. You can maybe make mistakes at your job, and I hope you don't, but you have maybe a routine, what you do every day. So Also, trading has the candlesticks have a job to do as well. This candle opened and it failed to do its job. Remember what Ron said. Its job is not to go to an all-time high. Its job is not to go to the moon. Its job is not to go and trade to the all-time high. A candlestick has to complete the previous candlestick. It's like playing a game, like Tetris. You got to complete the pattern in order to continue to keep moving in that direction. However, there's going to be situations in the market that are just placed here at a certain time of day and they're correcting the move, okay? So you see how I'm talking facts now. So for anyone that wants to debate me or dispute this, you're more than welcome. I love debate. I love talking about it. But I can't even I'm reading it. It opened and I'm looking. I have two eyes, guys. I'm looking. Okay? I can even zoom in. This is where I'm zooming in, okay? So we can go right in here. Now, is this wick higher than this wick? I know some of you guys maybe need your glasses to see here. Maybe some of you guys have some bad eyesight, but I got LASIK eye surgery. But I want to say like maybe 10 years ago. So hopefully the LASIK eye surgery did a good job. And I can see that this line is lower than that line. Okay? it's not up for debate, right? We're not debating this. Those are facts. So when this candle opened, it was blue, 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 and it stopped right there. It did not complete the job to fill that wick and maybe either get up to that wick. That would have been an equal high. And if it was an equal high, that's technically it failed to do its job. Those are what we call tweezer top highs in the market. So this candle, to extend the uptrend, would have had to fill that wick and break for a new higher high. It failed. It's got a lower high. This is a lower high compared to the previous wick, okay? So remember when we're talking about overall the overall direction is still bearish, okay? Yes, that was a beautiful move, but you see where it failed. It failed right there, okay? So it could not get above. Now, when it got rejected, it came back down to the opening balance, okay? Now, what I see is, where does it pick up a bottom? Where does it pick up pending orders, okay? Did the candle engulf? Where did it come down to? I can see, if I wait for the entire candle to close, I can see it came down and it made a support right there. It made a low point right there. You still see how there is still technically some bullish volume still below that. So it still got support from this body of volume in the market. So it came back up and it closed right there, okay? So still technically bullish, but it didn't advance the new higher high. And at what time? 7 p.m. Eastern, new hourly candle. So when it came down, it closed right there. Next candle with that momentum was bullish. It was blue right here, 705, blue, blue, blue. But you see again, it failed to do its job. It failed to continue to come all the way up there and break these wicks up there. So sellers stepped in and with a lower high, pushed it down. Now the sellers are momentarily in control of the volume. They came down and took out that low and it closed right in here, okay? But you still see that body of volume that has not been transacted right there of that, the bottom of that candle. When it opened, you see how I know a lot of you guys, Trevor, are saying point of control 50%. I know I'm seeing it on a lot of these candles, but I don't want to teach about POC right now, Trevor. I just want people to understand the importance of continuation with wicks, but you can see where I'm getting at with the point of control. That's where Trev, I really started to learn this because I started to see a lot of these candles trading around 50% of previous candles. And then that's when I started to see, Trev, I got to study this. And then I started to see more than often they would always, not always, but they would trade into that point of control. And that's what we're going to go into next, guys. Like, I'm going to tell you guys, I used to study candlesticks 24 hours a day. Like 24 hours a day, nonstop, watching them, the way how they open, how high they go, how low they go, without even taking a single trade. Okay, this is just studying, learning, Someone's going to say, oh my God, Ron, you spent that much time learning and you didn't even take trades? Yes, because that's after I lost all of my money. I had no more money. I had zero. My account was negative. I had no more money to even put into the markets if I even wanted to trade. I was dead broke. I lost everything. When I was young, everything. I pissed it away. $50,000. My savings, my tuition at university, everything, guys. I don't want to. I'll talk about those stories later on. But I've been in the gutter. Believe me. So when I'm telling you guys this story, I'm telling you, I I had literally I didn't have $1 to put back into the markets. So I said, until I go work and I build up my trading account again, I need to physically learn how to trade, because I go back and when I looked at when I lost all that money, I didn't even understand what a candlestick was. I didn't even understand what an OHLC was. I had no idea what the hell a wick was. I didn't know what a body of a candle was. I didn't know what a market maker was. I didn't know what an FU candle is. I didn't know what a POC is. I didn't know what a order block is. I didn't know depth of market. I had no idea. I was told, you put in money in the markets, you're going to get rich quick, you're going to have 3 Lamborghinis in your garage, and you're going to live an amazing life. That's what I was told at a young age. And I believed it. I was naive, and I figured out that's not trading. That's if you want to lose all your money, go down that path. I chose another path. I chose the path to learn. That's why I'm spending this time with you guys. And some of you guys are honestly, like, when you unsubscribe or you get off this call, I'm telling you, you guys are going to miss out on some valuable information. I'm telling you the honest truth, because I can be with my kids right now and helping them with their homework, but I choose to be with you guys because I know how powerful this can be for you guys. And you know how much you're getting charged to learn this? I spent five, $10,000, $20,000 in trading academies in Toronto, and I was not taught a single candlestick. Nothing. It was all about balance sheets, financial statements on companies like Apple, learning the like options and the financials. I paid $5,000 for the Toronto Trading Academy for 1 week to learn all about a financial statement. We didn't even look at a chart. There wasn't even a candle shown to me. So this is all self-taught, guys, and you guys can teach this to yourself. So you see, just look back. You see that body of that volume of that candle? It's still kind of, you can see now, like, how I can bring it back, and you can see how it transacted, it held in there. It held, but this candle again, bullish, came back up. But you see, it failed to do its job and get back up there. Now it held. Again, one more time it came back up. But now we see lower highs, lower highs. You can see how the sellers are now offering and pushing this move down. Now you can start to see, remember this physical zone right here that I told you? We may revisit that later on. So you see why it's important. I learned also over time why it's so important to stretch this into the future, right? I didn't know about this. No one told me stretch all of your lines. No one told me that these lines would be static over time. I started to see that the same line that I marked up over here, the next day it would be trading back and doing the same thing here. That's when I started to learn. When you start to really learn what these wicks are, what these bodies are, points of control, and you stretch them into the future and you wait patiently and disciplined for the volume to come back in there, you can make some high probable trades. You don't need to be like just forcing trades to happen. You can literally wait. That's another thing I didn't know when I was learning to trade, to be patient, to be disciplined. I had no idea until years later the importance of that. Now that I know that, I take days off of the markets. Before, I didn't even know what a day off was in the markets, let alone take 5 minutes to on the next candle. I was trading the next candle nonstop, right? But now I can see that they're developing maybe a bigger pattern. Okay, now you can see, look, did that candle close below? Yes. So what do I do? The volume is the only thing that's variable. The volume is the only thing that's moving. The volume can tell you everything you need to know. Okay. So this candle did close below this. Remember this? This was an important resistance. I already broke this down. I don't want to talk about this again. That's why I tell you guys, pay attention, because I want to continue going. And if you get left behind on this call, I'm sorry, but you got to go back and review what I talked about. This is where we had those bearish ignited when I talked about market manipulation. It was right over here at this price, 4590 on the dot. learn your psychological numbers. I still haven't even talked about psychological numbers on this call. You see that high? What was that high? That high was 4,599 and 50 cents. If that doesn't tell you how psychological that was, and at the time of 7 p.m. right at 4,600, I failed to do my job on these calls. And guys, I cannot continue doing this anymore. I'm going to just go on with my life, because then everything that I've been talking about for the last 6 years means nothing. You know what I mean? And I'm seriously telling you guys, look at the number. You're going to start to see a pattern at these psychological numbers. Ask yourself, why did the gold come up to 4,600 at 7 p.m. and start this downtrend? It's not just by chance that happened. Okay, you're going to start to understand that time and sales is very important in the markets. That's why then when you get more advanced in trading, if you're in a profitable trade, this is where you got to start to learn how to be a mature trader and start to say, okay, I'm in the money. Maybe this is half of my daily goal right now. I'm not going to become a greedy trader. I know we're moving into 7 p.m. I know we're approaching a psychological number. I'm going to take some profit out of the market. You don't need to close your entire trade. No one is telling you close your entire trade. But what you can do in trading is, I didn't learn till years later to take partials. You can close half of the trade, at least pocket that money, and then continue to observe and learn what's happening. Then maybe if it comes all the way back down and comes to your break even or hits your stop loss, then you're going to learn from it. Then you're going to continue to learn. But while you're in the money, continue to take money out and build your capital, because when you learn how to do this, and obviously the more money you have, those small little percentages, 1/4%, 0.5%, 0.75%, 1% of a daily goal, they're going to start to go up from $5 to $50 to hopefully maybe some of you guys can get to the point where you make $500 a day, and some of you guys maybe are doing that right now. But you got to start learning how to make $5 per day. You got to learn how to make $50 per day. You can't just start learning and say that you're going to make $500 a day or $5,000 a day when you have no idea what you're doing. Okay, you got to learn, guys. Okay, so now you see that candle. What time do we got? It's 8 o'clock, so I got 30 more minutes, guys. And this is more of like a freestyle call where I'm going bar by bar with you guys. I will have more structure tomorrow. We'll go off of a blog, and then we'll start to talk about what we need to talk about. Then I'm going to open the floor to you guys, where you guys are going to unmute yourselves, and I'm going to have a conversation with you. If there's something that you're not understanding, I will do my best effort to make you understand it. And I can't. And please, guys, do not be shy on these calls. Okay. No one is here to say anything to you. Okay. We're all learning. Okay. And we make mistakes too when we're learning. And no question is a dumb question. I understand maybe there could be a language barrier. Maybe that could be why you're shy, but just try your best. Even if you have to type it out, or you can get like ChatGPT to write it out if there's a language barrier, don't worry, we'll figure out. There's technology these days that can write in Chinese and translate it into English to me. It's no big deal, guys. With the technology we have today, there's no reason why anybody on this call cannot communicate, okay? And I will try my best to answer it with what I know. And again, I want to say, guys, I'm not a financial advisor. I'm not a financial trader. I don't have a license to do this. This is all self-taught. I don't have the answers for everything that we do. I'll try my best. And I admit, I'm not a guru. So there's some questions that I'm going to have to ask you guys, or maybe we work together as a group and we'll come up with the answer. If not, we'll figure it out. You give me 24 hours, I'll do my research and I'll figure it out, okay? I love challenges, okay? So with that candle closing below, what happened to this, okay, now the words, this zone, this block, this supporting area, what happened? It clearly shows me that the sellers convincingly closed it below there. So it didn't just come down there, get a wick, and go back and close above, because that would have just been invalidated it for a certain time. It was like an impulse break, but the volume continued to close above, and then it could be back in that buying zone to take it back up. But this candle physically closed below there. So when that happens, what I do with these zones, blocks, rectangles in the market is I just change it to the opposing color. That's it. It's no secret what I do, right? That's it. And what that's showing me is that the sellers have control on that candle, not of the entire move. specifically on that candle because this was a supporting area in the past, and now I can see sellers have closed it below. So now it's switching my focus that this could be now where from the offers coming from up here, coming from up here, coming from up here, coming up here, maybe more offers are now coming into the point of control of this candle right here because this was the physical bar at 725 that physically closed below this zone. Okay. Now, when that happens, what I do is, and when I was learning, was I would change the color and I would put this into the future, right? And then now you can see what a confirmation close and a retest is. Okay. Now we can see that if we're trading, we're not trading just on impulse alone. Now there's actual confirmation. So at 725, I see that this candle opened and it was a bearish ignited candle. Again, it doesn't have a wick. So there was no buyers even at the opening balance to even try and push this up. Sellers came in right away. They continued their job by filling that low. They created a new lower low and they closed it basically 99% near the lowest point. I can see there is a tiny wick there, okay? There is a wick there, but it closed right there. Now, the next bar, this is where you see it opened blue, bullish, and it came up. Blue, 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 but you see now how it transacted in that red zone right there. The point of control of that big bearish candle that did the closing. So now they came up there and all of those sellers that were offering up there have came down now into this location. So they're offering here. They're offering here. And now you can see the evidence left behind. That was a big bullish candle that came in there. And look at how it got rejected right through that point of control. And the candle, look, took out the wick and closed below and closed. Next candle again, open bullish and look, lower high. Did not do its job to backfill that wick. Why? Because the selling pressure is strong. So, like when you're learning to scalp the markets, this is like, look, see how this area, guys, this is all live now. This is live. Okay, so let me just get rid of these because this is what I love to do when I'm learning. I'll pick up anything and just follow the price action, learning everything. So now you see how this block that we identified in the market right over there, you see when you stretch it into the future, look at that. So then it came back up. There was the bounce. Okay, found support again right at this supporting area where it built this flag. It came up, came up, came up. But look, it did create these highs. So technically, buyers did some highs. They broke through, but they're all lower highs. And you see how it didn't close above with blue volume? Because if it did, I would have flipped this red zone green. And maybe we could have been coming back up here. But you see how they came up, they spiked all of the liquidity up there, and then they reversed the move back down. And now you're getting a lot of a lot of volatility now because it's 8 p.m. This is the futures market open right now. So you see like how what happened here. So what I would be doing is kind of, if I was cleaning up my charts right now, you can now clearly see that there's a lot of resistance at this point right here. That's how I would do my charting if I was going to continue. I can see that the big liquidity, that was when we started the call, 6 p.m. That's a daily candle open. Look at how it retraced all the way right back in there. And you can see how it did not do its job by creating a new higher high. Hopefully I broke that down for you guys and you guys understood that. Now, this is still stretch it into the future. It's right below 4,600, psychological area. What I do in the markets is I also add pending orders myself, pending signals, I should say. So I put a line in there, I right click it, I add an alert, and I create it. Because if the market later on, I'm watching the football game, if it comes back up there, it will give me an alert that it's here, a notification. If I have my laptop with me, if I'm at my trading station, if I'm on my mobile, I get alerted. It could come back in there and go back down. Remember, there's options. I'm not going to talk about all these options right now because we'll save those for another class. But it could come up there, get rejected, and go back down. It could come up there and do what this candle did, break out and get rejected back down. So we could have a big blue candle that breaks out impulsively but does not close above there. Remember, it's a 5-minute candle. It gets a big wick and then it closes back below there. And then we could get this move, just like right here. This was a big blue candle that broke out. But look, did it close up there? No. It spiked the liquidity from those highs, came back down, closed right below. So it's still a red zone. Liquidity grab, There's the big selling leg that followed right behind. So the same thing could happen. And then the only other option is if it's coming up blue, like in this situation where it came up blue, did it go above and break out and close above there? It didn't. So if there's a blue candle that does, in fact, later on, come and build its way and close above there, then what I do is that red zone, I flip it to green because it could come down there and retest this. More buy orders are there waiting to buy that discount. It's got a verified break of a high with volume closing. And then its job is to buy and then backfill that big wick and fill it up and create a new high. And again, if I'm scalping, I'm not looking for this move to go to the all-time high. I'm looking to backfill that wick. And look, I can see a point of control of this big bearish candle right there, and I can see some structure above here. I can also see like a block in the market already creating. Look at all of those wicks created at 50% of this candle. Like, look, wick, 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 wicks, no blue volume closing above, stretch it into the future, wick, no vol. So again, if there's my zones, if I'm scalping gold tonight, I've already figured out my zones. Like, filling that wick, it could get stopped right there and find resistance because that's a point of control of that big candle. But if it can break and close above here, create that red line for support, it has a good probability it could get back up to 46.17. Okay, but it's got some resistance right here at 46.07. Okay, we're nowhere near this right now, but you can see now also individual candlesticks create patterns. When you put multiple candles together, they create patterns. So when you understand individual candlesticks, that's where we're going to go tomorrow. I'm going to talk about what each one of these candles are. So I will break down a bearish engulfing candle. I'll talk about what are a shooting star. I'll tell you what a hammer is. I'll tell you what a bearish engulfing is. I'll tell you what a bullish engulfing is. Whatever prints, I will explain to you exactly what that candle is. And if you're writing notes, you can write notes. No, we're not taking trades today. All about learning. We have a lifetime to trade together. But I would love if you guys would learn alongside me how to do this, because we really want to get into showing you guys new markets, especially the stock and options market. So when we get in there, we hope and we assume that you understand how to read charts, how to read candlesticks, and things like that. Okay. Um, so, do you guys have any questions about what we talked about? Okay. Today we basically just talked about a candlestick has an opening price, possibly a low wick, possibly a high wick, but they all have a closing price, okay? And this could have been on the 4 hours, for example. These could have been 4-hour candles. So it could have been 4 hours, 8 hours, 12, 16, 20, 24 hours. That's one entire day. Then the next day opened up. You got another 4 hours, 8 hours, 16 hours. Maybe it came from a Tokyo session all the way down here. It was trading into London, New York the next day. Then the next time it visited the Tokyo, London session, maybe Europe pushed the move back down because maybe this was more of a weekly resistance as opposed to like an hourly resistance when we're looking at the 5-minute candles, higher time frames. Okay. So guys, we talked a little bit about a lot of things on here, but is there anything that you want me to go over? Is there anything, Leo, trying to wrap your head around the POC really quickly? Okay, so let me tell you about a POC. Okay, so POC stands for point of control, and I'll have an entire call where we're identifying points of control prior to them developing, and then we watch what happens when the price gets in there. Okay, so what is a point of control? All candles, okay, again, all candles have a point of control. A point of control is just another way of saying this. Okay, if you grab a Fibonacci tool, okay, so you guys are pretty familiar with this Fibonacci tool. Let me just set it up for what I want you guys to see here. Okay, so pretend that this is a bullish candle. How can I illustrate this? Let me try and illustrate this like this. Okay, you've got an opening price. Okay, so this is a bullish candle. Let's make it green. Okay, look at this. Okay, so we're going to learn about what a point of control is now. Okay, so can you guys all see this? This is a bullish candlestick, right? And this is the Fibonacci. So this candle has an opening price, correct? Opening price, and it's got a closing price. It opened here and it closed right here. Very simple, okay? And when you attach a Fibonacci from the opening to the closing price, then there's something called on the Fibonacci, which is called a golden ratio, a golden zone. How do we identify that? Okay, first thing is the halfway point is not a Fibonacci ratio or sequence. It's just the half of everything. Psychological 50% of anything. If something is $10 today and it's $20 tomorrow, what is a fair price of that thing to the next day? $15. You take 10 plus 20, add them together and divide them by 2. You get 15. $15 is a fair value. It's fair for the buyer. Why? Because they're not buying the highest point of 20. They're getting a little bit of a discount. And it's also fair for the person selling it. They're not getting the best available selling price, but they're getting a fair price. Okay, they're still making money, and the transaction is fair for both parties. Okay, so when you see a candlestick, all candlesticks have volume. Some might be have a big real body, and some like this has a very thin body. Okay, so I can still, you see this candle right here, this little tiny candle at 235 today. It's got an, let me zoom in so you guys can see. Okay, because I want to make sure everyone understands point of control, because all candlesticks with volume have point of control. It's just some candles are more important than others, structural candles. Okay, see this candle, how it opened, it was bullish, it came down, it made a low, came back to the opening price, it made a high, and it closed right there. Okay, there's still this blue volume. It's a spin top candle. Okay, that's an indecision candle. It's not really a structural candle. It's not telling me a lot, but there's still a body of volume. So I could still determine where the point of control of this candle is. I could still grab my Fibonacci at the opening of that volume and place it at the closing of that volume. I can still determine exactly where's 0.5. It's right there. That's the halfway point of that candle. 4616. So I know the opening price was 416 exactly. Look, 4,616, and it closed at 4,616 and 24 cents. So I know there's the halfway point, 4,616 and 12 cents. I can also determine where the point of control is of that bullish volume. It's right there. It's the one ratio above, either the 618, 382. So I do have the point of control of that candle. But you see the candle I'm doing my analysis off of? It's not a really relevant candle. It's not really relevant to anything going on. It's just an inside candle that hasn't closed with any volume above this candle, nothing. So you can see if we're doing our analysis off of this candle, we're not getting true analysis. Okay, you guys understand that? There's certain candles that we apply this to, and they're either like big engulfing candles, they're candles trading with abnormally large volume. You will understand, like, we don't want to find the point of control of that volume. This one, I don't want to find the point. I'd like to find maybe this one, this big black one. It opened, it closed near low. Look at the size of it. Compare a candle with big volume. Those are the candles that we want to kind of learn about points of control. Okay, so speaking about how to find point of control, very basic. I plot my Fibonacci from the opening balance to the closing price. Okay, I'll explain on a different call why I don't include the wicks, why I don't do the range. Okay, there's a specific reason why I don't do that. The easiest answer to that question is the wicks just display the range. Remember, I want to know where the real volume is, the real body. That's why I base all of my analysis off of the real body, the opening and the closing price. That's the end of the story. That's my answer. Okay. You know, I don't have any other specific answer to tell you guys. Do you guys know what I mean? That's it. That's why I've learned. I used to do the full range of a candle when I started to learn this. I would do the lowest point to the highest point, but I started to see it wasn't reflecting the true volume of the candle. It's nice to know the lowest points and the highest points, but you get more information from the true volume in the candle, okay? And now when I cut it in half, basically I want to know the halfway point, okay? Right there. We cut it in half. Now I know where this candle opened, where it closed. I know the exact fair value of 50%. Okay. And then I identify the point of control right there. That's the point of control. This golden ratio, this zone right here, from the 0.618, 0.32, and all of this in between is kind of the meat of the candle, okay? Because if there is a retracement that comes back in here, so the next candle opens bearish, comes in, it's a black candle coming in, coming in. Yes, it could be a shallow pullback right there, and it could go back up. But you still see how the point of control of this candle is still pending in the market, okay? And this could continue, just make a shallow pullback right there, find support, and continue going up. But you see how there's pending orders still waiting in this block? There could be some pending buyers waiting, still waiting patiently. The market knows that they're there, right? The market can see pending orders, but maybe it's just not ready to come down there because there's more buyers asking to trade up here. So it's already maybe picked up enough volume that it does not need to come back into here at this moment in time. But what you and I can do is we can wait patiently for the market to come back in here. Whether it comes back in on the next candle, next 15 minutes, next 30 minutes, next hour, next 4 hours, or the next day. I don't know when the market decides to come back in here, but if it comes in, there is still some pending orders in that point of control waiting to be executed, waiting to be picked up, okay? And there's also sell orders in here too. So don't always assume that these are all buy orders, okay? But it's representing the point of control of that previous candle, which in fact was bullish. So maybe the majority of these orders are leaning towards pending buy orders, buy limits, buy stops, okay? But there could be sell orders in there too. We don't know until the delta of the volume comes out after the candle prints, okay? So let's say later on, let's say 30 minutes later, the market comes back down, See that? That was the previous low. It breaks it, creates a new low. Now maybe it transacts in there. So all of these buyers who missed out on that buy right there, missed out on buying all this, maybe they're not FOMO traders. Maybe they're not in a fear of missing out. Maybe they have a little bit of experience in the markets. Maybe they've learned over the years how to be patient and wait for the market to come to you. So then the market, comes back down, and comes in here. Now it's transacting with all of these orders in here. So it could just, trade in here, all of a sudden pick all those orders up, and now it's ready to go back up. So that's where I watch to see if it's coming in here, picking up those orders, and I want to continue to trade with this trend going up. That's where maybe I will potentially look to buy. Maybe if I'm trading with a real tight stop loss, maybe I put my stop loss just below the block. Maybe I just put it below the next Fibonacci ratio right there. Or maybe I just give a conservative stop loss being right below the opening price, okay? And then my target is, remember, a candle has a job to do. Maybe the job is to come back to the previous highs, right up there to the previous high, and that's it. When it gets up there, yes, I might be looking to create a new high, but sometimes maybe it just comes close to it right up there, and I'm waiting for it to come all the way up there, and I miss out on a few pips, and then all of a sudden it comes back down to where I entered, and I was in the money, but I was waiting for it, What if a big seller just steps in right there, and that's it? That's it. The market comes down. So then you've given away all of those profits. So that's why whenever it comes close to a desired line, what I do is I kind of make a control a little bit above and a little bit below. Then I give myself a box to trade into as opposed to exact wick or an exact location. Now I give myself a little bit of a zone, right? And when it comes in there, I'm trading from one zone to the next zone. That's what I like to call myself. I'm a zone to zone trader. I'm a zone to zone scalper. I trade off of lines that I create with a top down analysis, and I trade off of those all day. Okay. So that's explaining a point of control. Now, I do have to wrap up this call in 10 more minutes, but let's kind of identify where we could look for a point of control. So remember, I told you there is certain, like any one of these candles, this candle, this candle, this candle, this candle, all of these candles, yes, they do have some volume but they're not the greatest candles to be analyzing, right? We want to look for full body candles, candles that physically close below previous structure, okay? So right here, using this example, you see right here where there was support right there, and it continued to go back up. Now we're coming down. See this big black candle at 3 p.m.? Look at the time too, okay? Because you'll start to see these things. This was 3 p.m. This is power hour, the last trading hour of the day. This candle, look, came all the way down and it physically closed below that structure of support right there. There it is. Okay. So with that candle, this candle is much better to analyze than like a spin top or just like a candle inside. This is a very important candle. It was very bearish, lots of volume. Look at the size of this volume-based candle compared to this one. It's kind of like 2 to 3 times bigger than these candles. This one is another important one. This one is another important one, right? You'll see by practice exactly which ones you need to analyze. So had I analyzed this candle, what I do is I do the opening price down to the closing price. We determine where 0.5 is, right? We cut it in half. Our theme song here at SST is Cut It by OT Genesis and Young Dolph. When price gets too high, we cut it. When price gets too low, you cut it, okay? If you need to listen to that song while you're trading, listen to it, okay? It will remind you how to always cut candles, but we don't just cut them in half. We want to find the zone, the point of control, the heart of the candle, okay? Sometimes you'll see it will trade right exactly to 50%, but that's not always the case. Give yourself a little bit of a buffer zone, a little bit above and a little bit below, okay? Now, once you identify that zone, your next job is to continue and stretch the zone into the future for a later retracement if, in fact, it comes back up there. So you see, I'm still stretching it into the future. These candles came up, back down, 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 and then it was a bear flag and they redistributed it back down, okay? So we have not transacted in here. Okay, I stretch it into the future. Look right there at the opening balance of the daily candle. It opened 6 p.m. Bullish, bullish, bullish. Look at how close it came to transacting into that zone. Okay, sometimes you're going to see this. You're waiting for the alert right there. You're waiting for the alert and you miss it by a tick. Believe me. This has happened to me and it's going to happen to you. It's frustrating when this happens. You've been waiting all night for it to come into you and it missed it by a few ticks, but it happens, guys, okay? But you can kind of understand maybe more of the context behind what I'm saying here. Just because it missed by a couple ticks, maybe tomorrow it's not going to miss by a couple ticks. It's going to come right inside there and have the same reaction. Look at the reaction of this candle, okay? It came in there. You know, this is just trading off of this chart FXCM. If I'm trading on my other broker, my live broker, Fusion Markets, maybe Fusion Markets technically transacted in this point of control. But this is just feeding off of the information from this broker FXCM. Okay, they have different spreads, they have different opening balance of candles. If I look at my broker, maybe in fact it did transact right inside here. Okay, but looking at this chart, technically it did not, okay? And I'm just basing off of the point of control of that body candle. But now you get the gist of what happened. This was a bullish candle, transacted with a lot of those orders up there, and look at the selling pressure, rejected back down, and that started this big bearish leg coming down. And then when we followed us on this entire call, we saw it come back up, but there is a little bit of a zone right here that was kind of created in the market. So if we go off of still this bearish candle and we find the point of control, you know, like none of these ones are very important to find a point of control, but this one is. Maybe if you wanted to continue to trade off of that, maybe you were looking for buys above, you got to see if the buyers can close above a point of control to see if they can prove it to you, okay? So this was a big bearish engulfing candle. If I go back to the left of the chart, maybe I can see Was there any pivot points in the market at previous times? Maybe you can go back, you can start to see stuff in the markets like right there. See those candles right there where it came down, made a low, didn't create that new lower low, is higher low, and started this big bullish move. If you just identify at that time, this is an important time in the markets. 9:25, there's 9:30. There's Wall Street market open on a Monday morning. And you can literally see now, there's the cut point of that candle. Okay, and how we were trading. Right now, we're trading exactly right in this point of control right now as I'm speaking. So that was a big bearish candle. Look, it closed below Wall Street markets open. It even ended up closing like right below these wicks right there, okay? So it did take out some liquidity from earlier today, right there. There it did. It created that new lower low. So look at how it did advance for that new lower low. But the new bearish candles have not done their jobs to continue to fill back down there. They're trying. They got lower highs, and they're still trending down. But that big bearish candle right away as a scalper. If I'm scalping 1 minute candles, I go grab my fib tool right away, opening balance, closing balance. Cut that bar in half, 0.5, and then I make my zone relative to the volume right there. So it's red. So I see the next blue candle came into that zone, back down. Look at this is what we were talking about earlier. This kind of zone right here where see how it came up, created those highs, but didn't close above. Now it continued to close above. So right when it closes above, that now invalidates this bearish point of control because now the buyers have closed it above. So it's still a technical point of control of the size of that candle, but now with the buyers closing above, I just changed the color of the zone to illustrate at this point in time that it's representing buyers. And now if you continue to look at, yes, it did. It came in there, represented the buyers. It came back up, we couldn't break, came back down. There was that big bullish engulfing candle that started, and that started that next move coming right back up. If I continue with this zone, moving it into the future, you still see that big selling pullback. It technically created a bullish move coming right back out of there, but they could not advance it to close above any of these bars. Continue to push down. If I see right there, there's where that candle closed below momentarily, okay? So as soon as you get one candle that closed below, this is what I do. I make it red to illustrate that the sellers now have control. That bar closed below, but they did not open it and continue to fill that wick and continue pushing down. So it came back up bullish, and then the next bar continued to make a high and close above. So this is where I hate trading this type of choppy shit because every single candle, I'm changing it from red to green, red to green. So I know that we're in a consolidating area right now. We're not really in a trend. We're more in a range. I try to avoid trading ranges as much as possible because you got to be quick to get in and out. Otherwise, you're going to just be playing this yo-yo game and you're going to be getting upset. Okay, so it came right back up, but look, it didn't, build any more highs. Sellers bring it right back down. Now this candle is impulsively breaking in 90 seconds and continuing. So its job is to continue to break that low and see if it can advance a new lower low in the market. If this bearish bar closes below here, I'm going to flip that zone red and continue moving it into the future. If the buyers step back in and close it above here, it's still green, then maybe we're going to make our way back up. Otherwise, we're just going to be playing like a yo-yo trading in here where it's blue, black, go up, come back down, go up, come back down, go up, come back down. And then you're playing this yo-yo game in here. So, but if we go with the overall trend, what's going on is I can see from up here, it's continuing. If you just, connect one point to the next point, this connection A to connection B, I can see when that big move came up, it's still below that. They pushed it down. It came back up, lower highs. It came back up. It's still lower highs. So we are in a descending triangle coming down. It's still descending. So it's still bearish. Every successive high is a lower high, lower high. Yes, that would have been a nice counter buy, but you have to understand you're still trading against the trend. And you have to respect that. Same with these buyers that want to buy. They have to understand that they're still trading against a trend. And we're approaching the 7 a.m.'s lowest point of gold. I can see right there was COMEX market open. Here was 9 a.m. There was some news in the markets. There was Wall Street. That's the highest point. And now we're coming right back down. So you see right now how that bearish bar did in fact close below the zone. So the zone, I don't change the size of it. The zone was created off of the point of control of that big bearish candle, and the zone is still here. You can call it an order block, you can call it whatever you want, right? And then now if it comes back in here, hopefully it will illustrate that sellers are still here and pushing the market down. But if the buyers, close it above here, then it could be a green zone, come back in here, and then we're moving back. But maybe this is where a lot of transactions will take place. Okay. And sometimes the time of the day when you're trading. Like right now it's 8:30. The futures market just opened up. Sometimes we get some choppy trading. We get choppy trading in London. You get choppy trading in New York. You get choppy trading in Tokyo in futures market. If rule of thumb is if you see the market is kind of trading sideways, try and eliminate trading as much as possible, or maybe just reduce your sizing when you trade. Maybe wait for a trend to develop, because it's much better to trade with the trend than trade against it if you don't know how to counter trade. If you're accumulating a position, maybe it's time to accumulate a position but smaller sizing, because you can see you can get faked out, you might get mad, you might get frustrated, and then you're going to do some damage to your account when you shouldn't even be really trading this type of volume, this type of price action. Okay, because then the market is just it's trading up, going down, trading up, going down, picking up orders for a bigger move at a later time. If I know that, then maybe I wait for the bigger move. I watch how whoever's accumulating more of this volume, okay? Tomorrow we're going to continue the call and we're going to talk about more things, but we talked about a lot today, okay? So hopefully you got now maybe a better understanding of price action as a whole. And the most important rule is, when in doubt, wait it out. When in doubt, if you're not sure about a candlestick, okay, and we're watching 5-minute candlesticks, the same goes for if you're a 4-hour trader. If you're not sure and the 4-hour candle has already been trading for 2.5 hours and there's still 90 minutes to go, you might make an impulse trade. You have to try to the best of your ability to physically wait for a candle bar to close, because you can see how this one closed, and it verified to me right now that it did in fact close below this zone. That's a confirmation of a close. Okay, so as opposed to a candle just maybe breaking, catching a wick, and then I sell it, and it's still got 3 minutes left, and it picks up the wick, and then it's trading back up here, and I'm in drawdown, and I lose, I take a loss. Hopefully I didn't over leverage. Hopefully I didn't risk too much, but I got to learn from that. Then the learning is simply I went in on an impulse. I could have avoided that whole situation. I could have avoided that whole trade if I just waited for the candle to physically close. And this is why you got to determine what time frame works best for your trading. See, if I go to the 1 minutes, we're going to watch candles opening up every 60 seconds, okay? And I can see that these candles too, they have important structures. These candles, you see like this big bullish candle, on the 1 minute that closed above, if I cut this one in half too, I guarantee you I would have found the point of control, and that's a 3-bar play, continue to move up. There's a lot of candles that you can identify. Which ones are good ones to read off of, which ones are not the good ones to read off of, okay? But guys, that's it for me. I'm going to go watch the football game right now, Houston versus Pittsburgh. I hope you guys learned something tonight. I know we didn't do any trading. However, I believe it's very important that we learn how to trade, and then we have a lifetime to trade live together. I want to take advantage of these Tokyo sessions together, because the markets sometimes don't move as they do in New York, but I want us to learn. So if you can join us on these Tokyo sessions, it's like if you live in North America, this is evening classes for all of us. This is like night school. We're gonna go back. I'm gonna open up a trading academy, and I just want you guys to understand how we're gonna go about teaching things. So we start off simple basic class, learning about an opening and a closing and wicks, but we'll go more into detail. One class will be just about talking about wicks. One class will be just about talking about points of control. One class will be just talking about break and retest. One class will be just talking about impulse moves. One class will be just about risk management. One class will be just about how to handle emotions. How, like, guys, we can go on for this, like we're saying, a lifetime of learning. There's so much to learn, but just take the time to learn. We've got a whole website for you guys. Even these free blogs, like, you can learn so much with these free blogs. Like, there's blogs on swing trading. There's blogs on, guys, see the news with Powell right now. Unfortunately, Trump is trying to, like, it's getting nasty with what's going on. Like, a lot of shit is developing in the markets right now. There's war everywhere we look. There's barrels of oil flying around the world right now. There's shipping containers getting taken out of the waters. Like, it's unbelievable what we're going through. Like, we're witnessing history, and we're literally trading the markets live together while history is unfolding. So this is why I'd love for you guys to learn the real way, the proper way of trading, because there's a lot of traders out there that will sell you the get rich quick, sell you you're going to have a Lamborghini in a few months, sell you all of these things. Okay? I went through that when I was younger myself. But I'm telling you guys, yes, you might get lucky for the first little bit, but trading requires, you're going back to school. You're learning an education. Just like if you're going back to high school, if you're going back to college, if you're going back to university. I can't go to university right now and become a lawyer overnight. I got to spend, I don't know how many years of after university and post. It takes like 10 years to become a lawyer. Like, if I wanted to become an electrician this week, I can't become an electrician in 1 week, in 1 month. If I go to the electricians and say I'm going to become a professional electrician in a week, they're all going to laugh at me. So even when you think that you're going to learn everything about trading in 1 week or 1 day or 1 month or 1 year, a lot of experienced traders will technically say, you've got a lot to learn. You've got a lot to learn. First, you're going to learn from your mistakes that you make. Okay. We all make mistakes. I make mistakes. We all do. But we got to learn from the mistakes. So if you take a trade and it goes against you, you got to go back. Take the time before you even take another trade. Make sure you know why you lost. Be real with yourself. Go back and learn. Okay, maybe you got excited here at 6 p.m. The opening candle, it was blue, and you bought that candle right away. You bought it when it was going up here. You thought it was gonna continue to go up to here, right? And you, right as soon as that candle opened, you bought it. Maybe you had your stop loss placed below the structure, okay? And then it came down, and you got stopped out, okay? And you lost money. That happens. It happens to me, and it happens to you. But what I do is, I don't just go after I take a loss and then I just go start trading again. I go back. Well, what I do now, what I did not do in the past, was I never reviewed. I got pissed off, and then I would get mad. I would double up my trading to make up that loss. And you can see how I'm trading with no plan. I'm not trading with nothing. Like, first we got to go back and say, why did you even buy this candle in the first place? Okay? There's an obvious reason. If you waited for that candle to literally close and you didn't get excited right when the day opened, you could have avoided that whole situation completely. And maybe you would have sold and maybe made some money coming down. Because if you saw that, yes, it did open, it did take out those highs, but it broke, took the liquidity, broke the structure up here, got rejected, and closed near the low. Okay. And as soon as the candle opens blue and comes up and it fails, right away, maybe you can start to see that maybe it's a direction that maybe instead of taking a buy, maybe this is where we got to sell. And you can see maybe you place your stop loss above that wick and your goal is maybe a target down there. I don't know what your target is. Who knows? Because I haven't done a top down analysis. Normally, I've already done some analysis and I know what I'm trading into. Okay. I've got things marked up on the higher time frames. So this would be, if this is representing 7 a.m. and I'm trading over here at 7 p.m., I know that's 24 hours. So I know right there I would have an hourly point of interest right here, either on a 4 hour or an hourly. I would have a white line here, the way how I trade, because I start a top down analysis from the daily and then I go down to the hourly, then I bring it down to the 5 minutes. I know that that's an hourly pivot. If you don't believe me, watch. You mark this zone up. This is how you learn. Mark this pivot point and then go to your hourly candles. And there's got to be something that happened there at the hourly. There it is. Okay. So there is when I'm talking about this, there is an hourly point of interest right here. Okay. Like right over here, there is an hourly point of interest. I locate it by using white lines. There was where it was resistance. There's where the body closed. I came down, open, closed right there, opening. So we've got multiple closing hourly balances, opening hourly balances. We have where it came down to here, it went back up, it came back down, went back up. Now it came back down to that exact location. Okay. And you can see later on, like, look how it's still holding here. The opening hour, look, it hit the exact. Remember, all candlesticks have the same characteristics. That's why I learned when I figured out how to do this out on the 1 minutes and the 5 minutes, I started going backwards to a higher time frame. Normal, the way how you should start to learn how to trade is go from a daily, go to a 4 hour, hourly, 30-minute, 15-minute, 5 minute, 1 minute. When I started to learn, I did the opposite. I got fascinated with the 1 minute candles. So I started to learn the 1 minute and I didn't know what I was doing and I made so many mistakes. Then I would go from the 1 minute to the 5 minute to the 15 hour and work my way up the opposite direction. So then I learned that that's not the best thing to do. The best thing to do is start off on a higher time frame and then start breaking it down, and then you're going to know your higher time frames. Higher time frames hold more weight than your lower time frames. So if I see an hourly supporting area, then when my 5 minute or 1 minutes come down to this white line, you see how it came down and bounced right back up. Right again right now, like live, it just came down right to that white line and it's bouncing back up. So I could take buys off of this white line all night until the sellers prove to me that they close it below and then they make that white line resistance to further push it down. Then I'm selling down where? To the next structural level. Right there. I can see on the 1 minutes. There's a wick there, there's a wick there, and there's bodies there. I can do this with my blind eyes, just looking at that looks like it's a supporting area. You can literally see the evidence left behind right there. There was the big push up, and then you see the huge retracement that came down, right back in there. Buyers brought it right back up. Came in there, buyers brought it right back up. This green box is still green. You can see when it came in there again, it went back up. This green box, if I stretch it into the future, that could be my target. If it closes below here tonight, I could be selling down. And when it gets there, that's my zone. I'm looking to take some money out because it could bounce and come back up. But guys, price action is king. Price action is your leading indicator. You are literally your leading indicator because you are physically watching where a candle opens in real time, how low it goes in real time, how high it goes in real time, and where it closes in real time. Hopefully you're fast enough to figure out the point of control in real time. Hopefully you're fast enough to understand where the supporting areas are, resistance areas are, where you can draw your lines in real time. And then you patiently wait and then you utilize your indicators to help you with confluence while you're trading. If everything is in a check mark, like you've watched the 5 minute candles come down to an hourly point of interest, that's a check mark. You see that the RSI is at an oversold situation, that's a check mark. And that's how you can go about how to trade properly, guys. Okay. So today was an introduction class. What did we talk about today? We talked about, I erased that box I had on, but we talked about candlestick characteristics on tonight's call. So hopefully you learned a little bit about, maybe I got your brain now thinking a little bit. I know, unfortunately, to those guys that wanted to just come on, jump on and trade, I know it sucks, but I believe that learning how to trade is the most important thing. Okay. And then you can be self-sufficient. You can do this for yourself. You don't need to rely on us, and you can learn a life skill that could hopefully change your life for the better. Okay, guys, that's it for me. Join me tomorrow, same time, 6:30. We're going to go a little bit more in depth. We're going to talk about some other things. I'll have a little blog to kind of clean up everything we talked about, and then we're going to move on. Then we're going to learn how do candlesticks start to make supporting areas? How do they make resistance areas? Then we're going to start to identifying patterns. We're going to start to identify which ones are A+ setups. We're going to start to identify which ones are setups maybe we stay away from. Maybe if there's a setup we're not too sure about, I'm going to teach you about how to use speculative trading, feeler trades, all of these things. We're going to put everything together. One session at a time is this is one piece of a puzzle. Okay. Tonight's session that we did is one piece of a puzzle of 100 pieces we need to put together to finish this entire learning how to trade puzzle. Okay, so this is one piece of 100. We still have a lot to do. Okay, and some of you guys will say, Ron, this was, like, it was complicated. What we talked about today was a lot, but hopefully you guys understand little bit by little bit. We're going to repeat this same stuff over and over and over. It's the same stuff. You're going to become like a routine trader where you know exactly what you're looking for. Like, I can see this bullish candle already, this one right here. My eyes already know exactly what to look for. It's a big, solid, bullish engulfing candle. If I wanted to, I could have cut this thing in half. I could have found the point of control. I could be waiting for a pullback. But is this a structural candle that I want to base that analysis off of? Maybe it could be one of them. But time will tell if it comes back. So you can literally do some analysis, and what you can do for learning is, if you can set an alert, and then if it comes in there, you don't have to trade. Okay, this is how you learn. If it comes in there and maybe it bounces out of there, then you're strengthening your learning. Then you're learning how a point of control happens. Okay, you don't necessarily always have to learn by taking a live trade. Live analysis. Place some orders at these locations and follow up 2 hours from now. Follow up tomorrow and see what happened when it came into that location. And then do what I do. If it didn't come in here and go back up, if it closed below, then would you have made it red at that situation? And then you see maybe then it did this. Okay? Then you're learning, maybe I should be looking for a sell in this situation like that. Okay, but that's how you go about learning. Okay, there's no like real script of how to go about this. I'm just trying to think back years ago when I was learning how to go do this. How did I do this? So I'm literally going through how step by step how I learned how to do this. I was physically watching candles print, and you know what I'm going to do on one of the calls is predict the next candle. Okay, that's how I was learning how to do this. So I was watching the candles like on a naked chart like this, and then I would predict what the next candle would be. Would it be a bearish candle? Would it be a bullish candle? And if I was wrong, I would learn. Why was I wrong? If I was right, I would continue. Can I predict the next candle? Can I predict the next candle? And you might learn like that, candle by candle. If you want to learn a little bit faster, you don't have to spend 5 minutes. Go down to the 3 minutes. You're going to see a 3-minute candle produced every 3 minutes. You can go down to 2-minute candles. If you click here 2, you can go to 2 minutes. Each one of these candles is now 2 minutes. I'm sure, remember Ron said, all candlesticks have the same characteristics, right? So you can still see there's a big bearish one. You can cut that one in half, find a point of control of that one. You can clearly see that there is a little bit of resistance created right here in the market. Stretch it into the future. And maybe let's see if the 2-minute candles come back in here, and what will the result be? Will they come back in here and go back down? Will it do this? Then you're learning. Then you learned right there how to identify a quick little zone, and you've learned how to stretch it into the future. Okay. But I would go about a top-down analysis. Okay, start off with the daily, 4-hour, hourly, go down to the minutes. But if you just want to learn, just jump into the 2 minutes. 1 minutes are pretty fast, but you can learn a lot about how a candle opens, where it closes. Like, this is barcoding. Maybe I stay away from trading this type of volume. This is good volume. See this trending volume? It's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. Then it comes back up, and I can start to see like exactly a pattern, like how it's traded. Right there's the resistance. There's a bottom. I can see right here is kind of the neckline and all of this choppy garbage. So will it come back down to produce a double bottom? Will it take out this? Will it just hold and consolidate here? And in order to come back up to that red zone, and I figure out what's happening, okay? But guys, if you can leave us a like on YouTube, I know there wasn't a lot of us. As soon as I said, I'm not live trading, I'm teaching, we lost half of the audience, okay? That's what I mean, guys. Everyone just wants to come in and see where traders, not myself, but any live trader, just where they buying, where they selling, where they buying. They want a quick little signal. But as soon as I said, guys, today we're not doing live trading, we're learning, half of the people left the call. Okay, and what I said was, it's their loss. It's not my loss, and it's not your loss. So I want to thank you guys for those that stayed and continue to learn. I don't know like how long I'm going to do this, right? We're going to do it for at least this week, 100%. Maybe if you guys do like this, I'll do it in the next Tokyo sessions. But I'm going to start a series of this, but in a more private group with traders that really want to learn. Then I know 100% of those guys are willing to put in the time and really learn how to trade. Okay, and then I know that those traders are willing to learn, and those are the guys that and ladies that I really want to spend time with, because I don't want to get on these calls and then everyone's like, "Are you just live trading? Are you live trading? Are you taking a buy? Are you taking a sell?" When we're explaining what a point of control is. Okay, but and then if you want live trading, we do that in New York and on our private with Dave and all the snipers in Discord. But I said to myself, because I always go back from educating, go straight to live, and I said 2026, I'm going to try something different this year. I really want to help people learn the proper way of trading, and that's our job here. Okay. But thank you guys. I appreciate all of you guys. If you guys can also leave us a subscribe, if you guys took some value from today's call, if you hit the subscribe button, you're investing in yourself, guys. I mean that. It does help us here at SST, but to tell you the truth, I really don't care about YouTube. I've told you guys this 100 times. I'm trying to get this 100,000 for my son and my daughter. They want to see that play button. To me, I really don't give a shit about this. I can show you guys each video how much money we monetize. We're basically making 20 cents off of a 2-3 hour live session. So I'm not here to get rich off of YouTube. YouTube is just censoring us for everything we do. I don't know how much longer we're going to last on YouTube, to tell you the truth. We have multiple strikes against us. I don't know why. I don't do anything bad. I'm just teaching some financial education. But maybe they don't want you guys to be financially learn this stuff. Because, when you learn financials and you learn how to trade the markets, you can learn how to add a supplemental income to you and your family. The choice is yours, guys. And I hope that you guys do choose to learn how to trade. It could change your life for the better, but it could also be really bad for you. Because if you lose a lot of money and you don't know what you're doing, it could be financial ruin. Okay, so there is the pros and cons about trading. I'm honest. I tell you guys the truth about everything. I don't want to just come on here and say everyone's going to be successful, everyone's going to make millions of dollars. That would be easy for me to say. We'd get a lot of signups, but I don't want that. I want to show you guys that trading is hard. It's not easy, guys. There's days where you're going to go days in every single day and you're not going to be making money. There's going to be days you're going to go in a slump for a couple weeks and you're going to be losing money. There's going to be days where you don't even have money to eat. Okay, but trading is very difficult. Take the time to learn, and hopefully over time you'll come back at me in a couple years and say, Ron, you were right. I learned a lot in those years, and you were right about it. There is no get rich quick in this game. It takes a lot of hard work, a lot of dedication, a lot of sacrifice. It's all part of being. If you want to do this, it's not an easy life. Trading is very, very, very difficult, guys. But if you guys want to step up your game, you're welcome, guys. Stock Sniper Trading, we'd love to have you guys. Our Discord is unbelievable. Right over here, this is all of our guys in the Discord right now trading gold. Tyler, you still got Christmas set up. But guys, like join the Discord. Look at Mike over here with his charts. Setting up the buys with the arrows, showing the direction he's looking at prior to taking the trades. A lot of traders show after the fact. I did this, you did that, but it's nice to show what you're looking for, and if the trade plays out, it met your direction, right? I love that. That's showing that you guys are really learning. Okay, it's easy for anyone to take some trades and then come on and make a YouTube and say, this is I sold this, or I bought this earlier today and I did this. Come in on live and show us how it's done. Educate the masses. Join the live trading crew on YouTube and see what you can do. Put your mouth to the charts, and let's see you do it. It's not easy, but trading is hard as it is. Live trading in front of an audience and answering questions is even more difficult. But we love what we do. We're passionate about it. We are changing lives for the better. We got a lot of positive messages during the holidays and going into the new year. One of my favorite messages was someone in our Discord sent us a video of their daughter. She's my daughter's age, and was thanking SST, everyone at SST, also all of us at SST, and for teaching them a new skill and making them a very Merry Christmas. So it was blessed. They're not from North America; they're from another country, and it's nice to see that it's included in their whole family. And my daughter loved that message. So thank you so much. That's why we're going to start maybe a kids trading team in the near future, when they get a little bit older. And we're going to teach our kids this skill, guys. Okay. So I love messages like that. And it just shows that we're actually making a difference in the world. So it's bringing a little positivity in this crazy, negative, crazy, chaotic world we're living in. So I'll see you guys tomorrow, 6:30. Let's continue where we left off. This will be recorded. It will be uploaded on the website. I'm going to make a new section starting with like these new lessons that we're going to do that's going to lead into the SST Academy. These are all intro videos. I like everyone to join on these intro videos, and then we're going to get a little bit more advanced as we go along. But these are the pretty basic calls, but you can still see a lot of maybe traders did not know like what wicks are, what bodies are, what the ignited candle means, what a point of control is, what is support, what is resistance, patterns, all of these things. So we'll talk a lot about tomorrow. I'll have a blog dedicated to what we're going to talk about, more structure, and we follow along on that. Okay, guys? If you need any help, message us. Join our website, stocksnipertrading.com. Send us an email. Join our Instagram, Stock Sniper Trading. My Instagram, if you guys want to reach out to me, Sniper Ronnie FX. It's got the blue button because there's a lot of fake ones out there. I will not message you unless you message that one. And Dave Analysis. Okay, guys, have a good night. I got to go watch this football game because I'm missing the first quarter, but we'll see you guys tomorrow. God bless. We'll see you guys tomorrow. Thank you. I hope everyone learns something from tonight's call. Have a good night, everyone. Good night, guys. Have a good night. Justin, take care. Thank you, Danny. Have a good night. Everyone, stop. Keep learning, guys. This knowledge is powerful. Non-stop. Doesn't matter your age.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.